Hey, everybody, it is Friday, and you know what that means. Settle in, get yourself a happy hour cocktail because it's a variety show, and it's a thick boy. First up, though, we are trying, because we have so much great content today, we're trying a new format. Let us know what you think. Rapid fire news.
Yes, it's 5 for 5 Fridays, everybody. 5 for 5 on a Friday. That's my Z100 radio voice. Molly and I are going to run through 5 awesome stories, 5 topics, and 5 minutes each. And we'll see. 5 times 5 is 25. Can we do it? You'll find out next. We talk about Rivian, Nikola, Fisker, NFTs crashing, the creator economy surging, a little Taylor Lorenz dunking, Biden's crypto executive order, freedom, and Molly's favorite, her
Peloton.
crush on the new Peloton CEO.
I do. I love him.
We love him. I got a man crush.
It is Taylor Lorenz shout out day, not dunk day. Enough of that. Then
she's dunking on other people.
Oh, yeah. She's totally dunking with her awesomeness. Yes, there you go. Then I talked to Jai Malik of Countdown Capital for Angel Season 6, a guy right up my alley with his investment thesis.
Absolutely. And finally, producer Rachel with another edition of OK Boomer. It's a long interview. She jumped the fence on this one. She's going long. I think she's coming for us, Molly.
I know. Look out, but I think it's worth it. And it's going to be a great show.
Stick with us.
Season 6 of Angel is brought to you by Embroker. Embroker's startup insurance program helps startups secure the most important types of insurance at a lower cost and with less hassle. Save up to 20% off of traditional insurance today at embroker.com/twist. While you're there, get an extra 10% off using offer code TWIST. LinkedIn Jobs. A business is only as strong as its people, and every hire matters. Post your first job for free at linkedin.com/angel. And Ourcrowd. Ourcrowd helps you invest early in pre-IPO companies alongside professional VCs. If you're interested in investing, you can join Ourcrowd for free at OURCROWD.com/angel.
Hey, everybody. It's Friday. We've got too much show for you. We do news. We do interviews. And then we got Rachel reporting. She jumped the fence. She decided, I'm going to start doing long form interviews. Okay, I can't control the show anymore. I've totally lost the script. So we're getting into the 2-hour shows, but we got so much news, Molly, heading into the weekend that you want to comment on. I want to comment on. This docket is insane.
It's loaded. So we're trying a new format, aren't we? We're trying a new, like a lightning round where we're putting producers in charge of shutting our faces after a certain amount of time. This appeals to me in the radio way, which is like we've got 5 minutes per segment tops. So here we go. First, scoop. Taylor Lorenz has been at the Washington Post 5 minutes and already has this freaking fascinating scoop today about how on Thursday, we're recording this Friday, the 30 top TikTokers were hosted by Press Secretary Jen Psaki on a Zoom call to receive information about the war in Ukraine.
That is extraordinary. Congrats to Taylor Lorenz.
That too.
I know she's been getting in a lot of back and forth. There was some article in between her New York Times, and then she took a book break. Friend of the show, Taylor Lorenz, we'll have her on again. She did a great appearance. We had a great back and forth. And then she's at the Washington Post. But before she went there, there was, I don't know if you saw the whole brouhaha where she's like, New York Times doesn't let you build a brand.
True.
And not that you would have an experience in this. So that was kind of interesting. And then her Washington Post future colleagues then proceeded to have a dunk fest on her.
What?
Yeah, you didn't see this.
I didn't see that part.
It was pretty controversial. And then that created a second media cycle of New York Magazine and everybody else saying, here's all the best dunks on Taylor Lorenz. Because she said, listen, if you're a journalist now, you got to build a brand. I tell you what, she's right.
She's absolutely right.
She's 100% right. But these old school journalists are like, we're reporters. So there's
she's
reporters.
Also absolutely right about the New York Times letting some people build brands and not everyone. And it's the picking and choosing and gatekeeping that is the mess. However, here she is with the scoop about, because one of the things that she, I think, has struggled with is the New York Times respecting her actual beat, for one thing, right? And then this idea of like, is this beat important? Is the creator economy important? Does what these crazy kids are doing on TikTok really matter? Well, okay, it turns out that among other things, yes, we have all realized in the past 5 or 6 years that information warfare is a thing, that the information people see, and particularly young people see, is incredibly important. And that, in fact, TikTok is a place that young people are going for information. And so I think it's actually very smart and progressive. And they must have some people under 165 years old in the White House who were like, we need to talk to prominent TikTokers so that they can, get our message out.
Congratulations for Taylor for getting the story, number one. Incredible scoop. So for all the,
say what you
boomers dunking on her, you didn't get this story and she did. So she just came in and literally hit a half-court shot or dunked on your all asses. So I think you got to bow down to the queen here. She came in there and set the tone. The Zoom call covered the U.S.'s goals in the Ukraine and answered questions covering distributing aid, working with NATO, and how the United States would react to a Russian use of nuclear weapons. This is important work because young people are getting their information from TikTok, from podcasts. And this is what this administration and the Democratic Party and our government needs to do. There are a bunch of people out there talking and communicating. They become influencers. Dare I say, they should do this with podcasters. We're informed, but I do think if, 2 or 3 years ago, the Democratic Party had sat down with Joe Rogan, who is voting for Bernie Sanders and who thinks Michelle Obama should run for president. He is a lifelong Democrat who is the most left-leaning guy. They should have sat him down and said, here's what is happening with COVID. Can we give you the latest information? Can we give you inside information? And do that with 20 podcasters, the ones on the right, the left. You can bring Ben Shapiro into this, whoever, and just say, if you want, we'll brief you and bring them into the tent so you're all on the same side. I give the Biden administration incredible credit. I give Taylor Lorenz incredible credit for getting the story. A+ on both.
A+ on both. Completely agree. And to those wondering, off the off the top of their heads, if this is government-sponsored propaganda on TikTok, yep. And the reason it's there is to counter the spread of misinformation that's government-sponsored propaganda on TikTok. So there's nothing wrong with having an honest conversation with people about what you would like them to take away, right? We do that when we meet with companies, with founders, with PR people. This is an incredible to engage Gen Z at this level and not act like this stuff doesn't matter is a super pro move.
But let's be clear. Propaganda is when, it's biased or misleading.
Yes.
So this is pure information. So it's information so that hopefully you can unpropaganda the misinformation. I don't think we're trying to give them bad information, right, Molly? We're trying to win an information war against people with propaganda.
Right. And look, we can't debate the semantics. For one thing, we only have 20 seconds left of what is or is not propaganda. But if somebody's saying one thing, you should counter it with more information. That's just simple.
Bingo.
Yeah.
All right. Next story as we move along here. And if you're watching this on youtube.com/thisweekin, you will see a nice infographic. Rivian stock is down 79% of its peak as of noon Eastern on Friday, and its valuation has compressed from a high of $150 billion down to $35 billion after cutting its 2022 production forecasts in half. Molly, you want to give us a couple more numbers here?
There are so many. Let's see. Q4 results. You said $55 million in 2021 revenue, negative gross profit of $383 million from selling and delivering about 900 vehicles in 2021. They produced about 1,400 vehicles so far in 2022. That's as of March 8th. I can't imagine they produced many more since then. As we're recording this on the 11th, they produced about 1,000 cars in 2021, and they have, 83,000 pre-orders. So that's like if a restaurant's orders are real backed up.
Yeah, they're in the weeds, as we say.
In the weeds. Oh, yeah, exactly. The pre-orders, by the way, did include a fully refundable $1,000 deposit. So even if Rivian is treating that as a little bit of a revenue, it's not very much. Not a ton.
All right. You guys know my position on this nonsense. I called it out early on. I said on episode 55 of All In, listen, Rivian's worth $20 billion. And I came to that calculation because it had $17 billion in cash. So I put the enterprise value at $3 billion. $3 billion is amazing. That's a unicorn. If I invested in a company and it became worth $3 billion, I'd be stoked. $150 billion was a pipe dream. It was nonsense. Right now, Rivian's trading at $35 billion. And they have about $18 billion in cash. I'm not sure how they get that little bit of extra cash. I will say a $1,000 deposit to me is meaningful. I think anything over $500.
Oh, for sure.
Somebody's got to think about that. Put it on their credit card.
It's a big deal. Yeah.
Yeah. So I give them a lot of credit for that. I give them a lot of credit for the product. I give them a lot of credit for making a product that I think is pretty compelling. It's got a lot of cool features, and obviously people really want it.
Good looking truck.
good looking truck. And, $67,000 is not cheap, but, those trucks, the high end trucks go for even more than that, like an F-150 if you're getting there. Okay. But reality wise, if they're, only producing 700 cars a month, like maybe we can give them credit for 10 or 15 this year. I would be shocked if they hit 25K. I will put their deliveries, the over under at 17,000. This is a train wreck because of the valuation. And it's a lesson to everybody. When the market goes out, everything comes back down to performance, not promise. And you should not give this much credit to any company. You have to look at the fundamentals of public companies. If you're betting on momentum, you are going to lose all your money. And there are bag holders here, which are the public, who bought some pipe dream. This company will not be worth $150 billion ever again, is my prediction. If it does become worth 150, it would be between 10 and 15 years from now, maybe 15 years from now. It's going to take a long time. The stock's going to go down to 20 billion is my prediction, maybe 25 billion in the coming months. It's a disaster.
I'm looking up Amazon's investment, because the other thing I wonder is, at what point, so Amazon has a 20% stake in Rivian. Hopefully Amazon is not sitting there waiting. This is a bit of a side note, but I hope that Amazon is not just sitting there waiting for Rivian to produce trucks so that it can convert its fleet. Like, please go ahead and buy other electric vehicles in the interim.
Or hybrids or high gas mileage, like whatever you got to do. But,
right.
But I think it's great that they have this investment, but you got to dovetail this with Trevor Milton's episode 1090 appearance. That's going to zero. I think Nikola is trading at $3 billion right now. That company is worth $100 million. That company's going to be sold for parts. Anybody who buys that stock is a moron. Sorry. And if you own that stock and you don't sell it, all money has value. Losing 90% of the 10% you have left is just, you might as well take the 10% and put it into something that could 10x and maybe you get even. Nikola only has $497 million in cash. They're going to run through that real quick.
It just, like, the whole thing just sort of feels like, it's like American celebrity culture playing out in the stock market, right? It's like, oh, it's a big, sexy launch. And then in Rivian's case, oh, they've got Amazon and Ford on board. And they don't understand that, like, when an Amazon or a Ford or even GM, which I think GM may still be an investor in Nikola, because it's like a rounding error for them. Sure, they can place that bet. Like, they're like venture capitalists placing a bet. But it gives the imprimatur of incredible legitimacy to a company like Rivian when it goes out to the stock market. And frankly, investors and or the computer algorithms should be smarter.
I encourage everybody who's new to the stock market to not get confused by vanity announcements and metrics. Vanity announcements and metrics are ones that don't include a customer buying something or a product being delivered. So any announcement, Amazon put in orders, like this stuff's not binding. When people get the product and they're delighted with the product, that's how you evaluate companies. If you're evaluating a company based on, Nikola maybe having a letter of intent, which means nothing, all of this stuff is designed to create substance where substance does not exist. If substance existed, like Ford or Tesla or Amazon or Uber or DoorDash, they would talk about the number of orders, the number of rides, the number of cars delivered, yada, yada. It's a disaster. Nikola and Fisker, I believe, both go to zero because you now have, how many of the established players? You just did was it the Audi you reviewed? That was excellent. And then you bought another EV from another company that...
I did. I bought a Polestar.
And it's good or great?
It's great.
Awesome. So here we go. Like, this is no longer Tesla versus hybrids. This is like Tesla figured it out and it's a juggernaut. And now you have the other juggernauts who are going to come in second, third, and fourth. There is 100%. No room for Fisker. There is no room for Nikola. And there's likely no room for Rivian, all due respect. Fisker, $1.2 billion in cash. They're going to run out of cash probably in the next 2 years. I don't think it's going to be able to raise money again. That company has been restarted. I think this is the third time. They, shocked it with a defibrillator and brought Fisker back from the dead. The cars are terrible. I know somebody who bought one of the original ones. And then I saw all this nepotism going on. I don't want to get into it, but stay away from these stocks and buy the companies that actually deliver cars if you really want to.
This is a good startup investor lesson also.
I'm going to quickly explain one crucial type of insurance that all startups need. It's called E&O, Errors and Omissions Insurance. And it's going to really help you scale because any major customer is going to ask you for your E&O insurance to close your deals with them. So if you don't have business insurance, you're going to have failed one of the first steps of being a great founder. You have to have insurance because you got a lot at stake. You have investors, you have employees, you got customers. All of these stakeholders and customers expect you to be running your business properly, and that means having startup insurance. And startups should look no further than Embroker. Embroker's technology saves you time and money. Prices are up to 20% lower with better coverage than the incumbents. And you can go from sign up to quote to purchase in just 10 minutes. When you work with Embroker instead of the incumbents, you're not dealing with large, slow corporations. The sign up takes days, not weeks, and the process is completely transparent with no opaque pricing. Oh, God, man, I used to have to deal with 10, 20 years ago, all these legacy companies. It was the most painful thing in the world. And that's why Embroker's so brilliant. And I'm so happy to tell you about it. You can instantly buy custom-built insurance for startups by going to Embroker.com/twist. And while you're there, you're going to get an extra 10% off by using the promo code everybody loves most, TWIST, TWIST, this week in startups. Get that 10% off at Embroker.com/twist.
All right, next, we are overtime already. We're only on our second story.
Oh,
we're already biffing it.
All right. It's okay. A little overtime.
We're not biffing it. We're doing all right. We're going to get it back. According to a Financial Times report, daily trading volume on OpenSea is down about 80% month over month in March. 80%, dropping from, let's talk about going to zero, dropping from almost $250 million a day to $50 million a day. This also, at least according to Morning Brew, is the 1 year anniversary of that Beeple.
Amazing.
The Beeple NFT selling for $69 million.
Yep.
And let's see.
What's his name? COVID? No, not COVID. Kovan.
I think so.
You bought it? Yeah.
So you see this trading volume declining. The numbers are fascinating, right? The selling price has dropped 48% since November. Selling price of an average NFT, I mean. The average price of a Bored Ape has dropped about 44% over the past 2 weeks since the Russia-Ukraine conflict began. The number of weekly active accounts buying and selling NFTs fell like 49% from 380,000 in November to about 194,000. And then another Financial Times piece noted that if you measure the NFT industry by total active accounts rather than dollar amount, then the industry does seem pretty small, although pretty small is evidently something like $17.7 billion in 2021. I guess the really fundamental question here for Jason is like, where are we on the bubble meter?
Yeah. Okay. So a couple of things we should just pull up the Tulip Mania chart at some point here. This is Tulip Mania all over again. You guys can look it up, but there was a mania here around NFTs. They have no intrinsic value. The only value they have is in scarcity, which is built into, blockchain and NFTs, and they're one of one, except there's an unlimited number of them that are created. So they're one of one in billions. So you know how they say like each snowflake is unique? Yes, but there's a billion of them every time you have a snowstorm. And then there's like a million snowstorms. So we're talking about quadrillions of, these things. So
really good point. That's a really good analogy.
Yes, they're all unique. Like, and this is what I tell young people. Like, yes, you are a unique snowflake. I know your parents told you, but you're one of like a billion in like the next hour of snow dumping on Tahoe.
Mm-hmm.
So the other thing is that NFTs were a total grift and a totally manipulated market. That doesn't mean the art that was created was not gorgeous and of value in many cases. That doesn't mean the underlying technology is not brilliant. That doesn't mean the people at OpenSea are not brilliant. All of that can be true. And also, the playbook for NFTs was built on a scam. So here's Tulip Mania. Imagine you bought on the way up here and like, then it flatlines and then nobody needs any tulips. Bottom line, I would say 90% of the traffic was painting the tape and false trades. That's my estimate. I would not be surprised, again, if 90% of the trades were insider trading. In fact, was it OpenSea that had an insider trading instance? One of the two platforms had an insider trading instance with one of their senior employees that they had to let go.
Right.
If the senior...
It was OpenSea.
It was OpenSea. OpenSea had somebody internally front running. If the people inside of OpenSea are front running, what are the people launching these projects do? I can tell you when you go on Signal or Telegram or Reddit or Discord, there are rooms filled with anonymous accounts painting the tape, and they call the rooms like pump, and they come up with ways to pump this stuff. They created false trades That's why the trades are collapsing. Maybe OpenSea is starting to police the false trades. Who knows? But that was never reality. People were trading between themselves, and even Melania Trump reportedly bought her own NFT.
Yeah.
So if Melania Trump, OpenSea employees or an employee singular, who knows, and then everybody else is manipulating this market, and you're buying these things in the last year, you're the bag holder. You lost all your money. Period. Full stop.
That's what I wonder about the people who are left in our last minute, I believe. Who's left? Like when you look at the trading volume declining, are the people left, are they bag holders, or are they like the remaining savvy investors who are scooping up deals? And because, right, when a thing is like super hypey like this, it can go through a hype cycle, then a crash, and then after the crash is when it finds an actual landing sometimes. I mean, it's not like tulips are incredibly valuable, but
Beanie Babies?
Yeah, fair enough. So bag holders then. Yep.
I mean, I think if you look at Fisker, Nikola, NFTs, ICOs, and we saw .com companies, like, what are the shares of the Globe.com worth? They're still worth zero.
Right.
They became worth, the company was worth billions, and now it's worth zero. Things go to zero. This is the hard lesson people are going to learn. This is why when you invest in something, if it's an investment, you're looking at the intrinsic value of its ability to generate future cash flow, which means there's a product and a service and a customer and all those dynamics. And here you didn't have any of those dynamics. So you're just buying stuff because you think it's pretty, or you're gambling.
Yeah. Okay. Amazing. We're back on track. There was some very interesting news in addition to the White House meeting with TikTokers coming out of the creator and influencer economy over the past couple of days. And by interesting news, I just mean so much freaking money.
Yum, yum.
Friday Beers, which I had never even heard of, right? Started as a comedy Instagram account 2 years ago, just raised $6 million and rebranded as Almost Friday Media, which is funny. Mm-hmm. The Friday Beers Instagram now has 1.6 million followers, and they've created some other accounts. They've got a little over 2 million followers on all Instagram accounts, 700,000 plus followers on all TikTok accounts. They make money by selling merch, staging live events, and working with sponsors. It's basically a community building company that just raised $6 million. Speaking of product and future revenue, where do you see this falling?
I mean, creators are the new distribution is how I look at it. So Mr. Beast is like, in a way, Disney or Walmart. So like Disneyland, if you have a store there, or if you had a store in the mall, if you had a store on Main Street, or you had shelf space in Walmart or Target, that's distribution. The new distribution is Cardi B, Rihanna, Mr. Beast, all of these influencers that have millions, tens of millions of followers on social media. When they talk about a product, it grows. And so the Kardashians fall into this as well. I saw that Kim Kardashian, I think, raised at $3 billion. And so if you combine any kind of product alignment or a brilliant product that gets product market fit with a Mr. Beast, and I think Mr. Beast has tried a couple of things. I don't think Mr. Beast burger stuck or was very good, but that's probably a lesson for him. So if, let's say, there was a Mr. Beast burger 2.0 or chicken wings, or he's doing a chocolate bar now, if that product was truly exceptional and transcendent, then you could have a supernova-like event. Mm-hmm. Free distribution, right? Free distribution, digital free distribution. So I think one of the Kardashian sisters makes lip gloss. Is it Kylie, the one who makes the lip product?
Kylie makes the lip product?
I think it's Kylie. Yes. Producer Rachel says yes. Producer Rachel says yes. Thank you. Gen Z producer Rachel. Yeah. So what that means is, like, it's on brand. She wears it. She's an Instagram model, right? A notable model, I believe, is her skill set, and it's on brand. And it has product market fit. And from what I understand, it's pretty fantastic. So that thing, supposedly with the drops, I was talking to somebody, they said, like, you don't understand. This thing is selling out. Every time she does a drop, it sells out. It's got incredible margins. No distribution cost. Sell direct. They don't need to be on Amazon. They create a landing page. Instagram, YouTube, landing page, done. So this is the future, and it's pretty amazing. They just need to make better products.
They do. Also, I wonder if a pink flag for this future is the platform-based distribution, because you do still see these creators. It's free distribution, but on someone else's platform. Like, it harkens back a little bit to the conversation we had about Facebook taking, Who's that guy? Joe Spicer.
The $100 million
$100 million business to zero. Now, this is different in some ways, except that it still is totally dependent on being able to get traffic through these platforms and then sell products. And I feel like if there's a risk factor for the creator economy, the only thing I see there is the platforms.
Yeah. Immediately what I thought of with this Friday beers thing was, what if that account gets turned off on Instagram?
Right.
So what they need to do is collect emails, collect phone numbers, SMS, so they can send messages, get those. Each one of those is worth 10 or 100 of the followers on TikTok, etc. So that's what any creator has to do. I talked to Mr. Beast about this. He didn't have a lot of emails. I said, you need to take your team's mission should be to convert 2% of subscribers on YouTube to emails every month, and just compound that over time. And maybe in 3 years, you'll have this incredible base of emails. So you can just email people and their phone numbers. And don't be dependent on any one platform. So if you look at the Kardashians, they have a TV show or had a TV show. You know, they have Twitter, they're incredible on. Instagram, they're incredible on. TikTok, I don't know if they engage. YouTube, you've really got to be multi-platform.
You really do. See also Taylor Lorenz, you need to own your own brand independent of the big name that is distributing you, because they are not your friend.
Taylor Lorenz,
you are your only friend.
So well said, to dovetail the two stories into a callback, because people want to read a Taylor Lorenz story now. Yep. And it doesn't matter if it's in the Atlantic, New York Times, or at Washington Post. And, at this point, Substack's probably thinking, let's send her $500K. And the same thing with Kara Swisher, who's a brand unto herself, or you and I. You know, Kara Swisher was on Recode and Vox, and then New York Times was like, oh, Jim Bankoff did all this work at Vox, making Ezra Klein and Kara Swisher into brands. New York Times like, we'll take those two.
We'll take them.
And they just took them.
Yep.
So Ezra Klein's out. And so now it's like New York Times, like you said, is the Amazon of content. Boom. They're just going to run the deck.
But those, hopefully those creators are also smart enough to understand that the platform doesn't love you back. So it's all about owning your own brand.
That's it. It's a new year, but for some businesses, it's harder than ever to find and hire the qualified people they need. This is especially true for small businesses, and that's where LinkedIn Jobs comes in. They make it easier to find the people you want to talk to, faster and for free. We love it. We've used it many times here. In fact, we just hired an awesome video editor just last week. LinkedIn Jobs is the best. You're looking for talent, that's the place to go, because when you create a free job posting in just minutes, you're going to reach the world's largest professional network of over 770 million people. Wow. Use screening questions to filter out all the non-serious candidates, right? Hey, if you're going to hire somebody to be a video editor, you can say, hey, what tools do you use to do video editing? If you're hiring them to do podcast video editing, you say, hey, what's your favorite podcast out there? If they can't answer those two questions, they really qualify for the job? Probably not. And you can use LinkedIn's simple tools to quickly filter and prioritize who you want to interview. That's why small businesses rate LinkedIn Jobs #1 in delivering quality hires versus leading competitors. So here's the CTA, the call to action. LinkedIn Jobs helps you find the candidates you want to talk to faster. And did you know every week nearly 40 million job seekers visit LinkedIn? And did you know every week nearly 40 million job seekers visit LinkedIn? That's why we hired our video editors so quickly. So post your job for free at linkedin.com/angel. That's right, for free. LinkedIn.com/angel to post your first job for free. Terms and conditions do apply because they're giving you a free job posting.
And then finally, the Biden administration released an executive order related to crypto on Wednesday. We didn't get a chance to. This is how bonkers this week has been. There was like an executive order on crypto, and we were like, we don't even have time for this. But this is very interesting. This is a moment, I think, in the crypto economy. So the order mentions the following. It tasks the Department of Commerce with establishing a framework to allow the U.S. to dominate in crypto. Mentioned exploring a state-backed CBDC, a central bank digital currency, or Fed coin, as it's been called. This is this sort of like spin-off idea where we've got a stable coin, but it is in fact backed by Federal Reserve dollars. And then asked federal agencies to up their action on illicit activity in crypto and its potential national security risks.
Yeah, I mean, this is big news because it's an executive order and they want to engage and win. I will say, I've said this for a long time, these CBDCs, central bank digital currencies, are the future, and no country is ever going to allow the control and power that comes from running money to be handed over to an anonymous, manipulated tech stack. It's just not going to happen.
Yep.
And I know that that's the dream for everybody, that like You can't stop BitTorrent. You can't stop Napster. But we're all subscribed to Disney Plus and Hulu and Netflix.
Yeah.
It did get stopped.
And
so,
iTunes.
Sorry if I'm
being Spotify. No, it's true.
Spotify.
We've seen this cycle.
We've seen this before.
And we've seen this with stuff that was relatively trivial compared to the world's reserve currency.
Correct. So what's going to happen here is, and I predicted this forever, and everybody was like, you don't get it, J-Cal, have fun being poor. The U.S. government is going to have, thanks, a little chance of that with the number of startups we're investing in.
I'm like,
Molly's on the inside. She's like, we're putting some money in.
I'm not that worried. I'm not that worried
now. CBDC. It's kind of funny that it's CBD, right?
It totally is.
The Fed coin will allow the government to do all kinds of interesting things, get rid of fraud, get rid of illegal transactions, and tax evasion. So if people are gambling or they're handing envelopes to each other or, sending $5,000 things, like 1099s and W-4s and all this reporting that happens in accounting is all going to be built in to a private blockchain called the US government. You're not going to be able to cheat on your taxes. You're not going to be able to hide revenue. You're not going to be able to give inheritance on the slide and pretend it's something it's not. This is going to be a tax bonanza for the IRS. And if somebody does something illegal, it's going to be instant seizure. So somebody does something illegal or they don't pay their taxes, I guarantee you in 10 years, the government, if you didn't pay your taxes, will just take your dollars off the blockchain. So this is about control. It's going to be more control for the government, less fraud, which is good for the people who are good actors. And then anything that's Bitcoin or USDC or Tether, God forbid, or any of these other projects are going to be taxed. They're going to tax them and they're going to say you can be this big. So they're going to say if you're this big, you need to have this set of regulations, as I predicted. And then if you're this big, you're going to need this, that, and you're going to get taxed at these rates. In other words, they're going to make it impossible to compete against FedCoin.
Yep, exactly.
FedCoin wins. That's what this is about.
Let's be 100% clear. The United States has been way behind the ball here. And the moment of freak out for them was when China announced that it was about to introduce a digital currency, because that digital currency, should it get to be traded on the margins between countries that we now realize might not have the best of intents toward the, world order, if you will, could upset the dollar as the world's reserve currency, could also start to be a preferred option for countries and companies. And all of a sudden, and I mean, listen, I interviewed the head of the incoming head of the FDIC in 2019 and was like, what is the United States government doing about Bitcoin and cryptocurrency? And she was like, I don't know, we're kind of looking at it. And it was not 6 months later that China was like, we're doing a digital currency that is 100% government controlled and backed. Yeah. And now you see this move. That is not a coincidence.
Yeah. I mean, the ECNY, which is the digital yuan, some people call it the digital renminbi. This was launched January 4th officially in 2022 before the Olympics. And you can get it on Android. You can get it on your iPhone. 1 billion users in WeChat have it. And games, before the Olympic Games, they forced, I believe, McDonald's to take it. So, the Chinese government, because it's a dictatorship and an authoritarian, they can just say, this is how it is. And in an authoritarian country, let's say you say something against the government that they don't like, or you buy a book that they don't like. They can just seize all your money. They can just turn it all off. So this is going to be something crazy to navigate. It's going to create more control, less fraud. China, we have no choice. Like to your point, more surveillance.
Like, don't kid yourself. That is a part of this.
It's about control. And so we do need to have a discussion about freedom and not getting rid of. We cannot get rid of print money. Just like you should still be able to drive a car that doesn't have a low jack in it. So there's going to be some freedom principles here. We embrace digital currency if people want it, but you still got to accept cash. The moment they say you can't accept cash in the United States, that's when we go into authoritarian, danger zone. So be careful, folks.
Call us, White House. We'll help advise you.
All around the world, tech companies are innovating and driving returns for investors. And Ourcrowd is an investment platform that analyzes many of these companies across the global private market. Then they select startups with the greatest growth potential and they bring them to you. From personalized medicine to cybersecurity, robotics, and quantum computing, and more. In state-of-the-art labs, startup garages, and anywhere in between, Ourcrowd identifies innovators so you can invest when growth potential is greatest, and that's early. Ourcrowd accredited investors have already invested over $1 billion in growing tech companies, and many of their members have benefited from their 46 IPOs or exits. And this is an amazing way for you as an angel investor to start your career. You get to read the deal memos at Ourcrowd and pick and choose which ones appeal to you. And you get to put a small amount of money in while you're learning. And they get access to deals that, let's face it, you may not have access to if you're just starting your angel investing career. So now you can truly diversify your portfolio by investing early in innovative private market companies at Ourcrowd. Join the fastest growing venture capital investment community. Head to ourcrowd.com/angel. That's OURCROWD.com/angel.
Our favorite CEO, our other favorite CEO, not including Jason and Frank Slootman and
anyway, and Glenn from Redfin, crushed it this week.
He's so great.
We had no all-in this week, so I was like, sorry, there's no all-in this week, but here's a list of 5 incredible interviews we've done that you can watch on This Week in Startups, folks.
No big deal.
Try to catch up.
Our CEO that we are still hoping will come on the show, Barry McCarthy, new CEO at Peloton, reported, the Wall Street Journal reported that Peloton CEO Barry McCarthy said, it isn't clear yet the role that Peloton machines will play in the company's future. This is a big, potentially big shift here. He said, roughly 80% of capital spending goes toward equipment right now, with the rest spent on software. And he thinks that number should be reversed. Peloton is experimenting with subscription models. And as you know, he had hinted at this idea that Peloton would test new monthly subscription services where customers pay a single bike and connected fitness subscription, $60 to $100 a month, with the option to cancel anytime. Right now, of course, the company offers a bike purchase at $1,745 or $1,500 plus $249. And then the bike plus is $2,500 with free delivery. And then the subscription is separate at like $40 a month. So I guess he's basically saying, how can we combine the hardware and the software, but maybe even in the future phase out hardware?
I don't think so. I think the hardware is Apple level
key,
important
right?
in this.
Yeah.
So I think this is an and, not an or. I think what he's saying is, in terms of dollars deployed, we need to greatly increase our investment in software. As a Peloton user, I will say the product is perfect, but you don't see updates. If I looked at my treadmill from 3 years ago, I can't tell you anything in the software that's updated. Yeah, I literally can't. I'm really thinking off the top of my head. Oh no, I do know. After they had this series of tragic accidents, which I don't believe are their fault, they're just the nature of treadmills, they put a PIN code on it. Literally nothing has changed in the interface or software. It's perfect. They left it, but it would be like if you got your iPhone and you had it for 3 years and they never updated the OS, or you had a Tesla and 3 years later, nothing had changed. They should be adding Spotify, SiriusXM, Netflix, Disney. Every month, new features should come on your Peloton. Period. Full stop. And I should be able to pick my playlist to go with a class. I should be able to watch window in a window. I should be able to have CNBC in the corner while taking a Peloton class, pull up podcasts while I'm listening. Why is there not a podcast player? If I'm on my treadmill, I listen to podcasts. So I got to bring or I watch Netflix or Disney. Like I got to bring my iPad, and I have a plastic thing that they sell on Amazon for $15 to cradle your goddamn iPad on your Peloton. It's so dumb.
I'm just making like amen hands, because yes to all of that. And the idea of flipping this on its head and not making everything. And frankly, this will undo the iPhoneification of the concept of hardware, right? Which is that it has planned obsolescence. And I bought, on the other hand, as you know, like the half price Peloton. I bought the Mix bike.
Yep.
Great bike.
Yes.
Good subscription. And then they introduced a new bike, and it has all these new software features. So I'm like watching workouts now, paying my $40 a month, and I'm on my old bike. So the stuff they're talking about, like the RPMs or this and that tracking or whatever, doesn't exist because they didn't update my old bike. So like once you get off of the treadmill, no pun intended, of selling people new hardware because the new software only supports new hardware, then you can actually delight customers instead of pissing them off by essentially bricking their old hardware that they paid a lot for. And then now what are they supposed to do with it? So like, I see this as nothing but more proof of Barry's continued genius. Also, literally the second I could buy a Peloton on a subscription model and have all the content included, done and done.
Yeah, I mean, they have access to capital. They should press that advantage, and they should let people buy these things for $99 a month. And after 24 months, your subscription, after you pay it off, after 24 months, you drop down to $30 a month. Yeah. There are so many, the number of people who would be onboarded. And listen, the stock has crashed already. So let's go for scale. Let's set a goal of 10 million subscribers by any means necessary. And if the bike costs them $1,200, if the hardware costs them $1,000 to make and they sell it for $2,000, for the love of God, just like make it $99 a month. Anybody can afford $99 a month. That is literally for an Uber driver or DoorDash driver, I think like 8 runs or something. If you make $10 on average, $15 on average, it would be, you could do it in a day. So
we'll be careful with the anybody can afford, but it's a choice that you would be willing to make.
I'd say
for a lot of people,
75% of Americans can afford.
Versus $2,500 out front and outlay in a country where like
Americans.
Most Americans can't come up with $400 in an emergency. So yes, like it's a much more.
I mean, if the average rent in America is $1,000 or average mortgage payment is $1,000, there's obviously a wide spread here. You're asking people to come out of pocket for 2 months rent? No. Yeah. Or 3 months rent? Heck no. $99 a month is 1/10 of your rent. It's easy. Easy.
And then benefit from ongoing software updates and feel valued as a consumer, not like a sucker who invested in hardware that's now,
I will say they haven't obsoleted the Peloton hardware.
Right.
And because it's Android, I do think they could very easily send somebody to your home for $500 every 5 years to upgrade.
Yeah.
Hey, Molly, tell us about your amazing interview today for Angel Season 6.
Yeah, speaking of hardware, our interview today is Jai Malik from Countdown Capital, who is not afraid of hardware. Countdown Capital's thesis is to invest strictly in hardware products and American manufacturing and defense.
Let me tell you something. Hardware is hard. I cannot wait. Has he figured it out?
I mean, I guess we'll find out. It's super interesting. He is a first-time fund manager. I talked to him for an interview on Angel Season 6. It's a good one. Check it out.
Absolutely. And if you want to, you can search for Angel Podcast, maybe Angel Jason Calacanis, and you'll find it in your player. We have a separate subscription just for all 6 seasons. If you want to just have a nice, easy play through all 6 of them, and you'll get 60 interviews with amazing investors, masterclasses across the board. Let's get to Molly's amazing interview.
Jai Malik of Countdown Capital. Welcome to the show.
Thanks for having me, Molly. How's your day going?
So great. Such a great day. It's like almost Friday. It's all coming together. How are you?
Love it. Yeah, same here. I am perpetually excited that I get to do this job. So I'm happy. Very happy.
Right. It is a super cool. Let's just take a step back and say, this is a super cool job.
It is. I mean, specifically with what I'm doing, investing in hard tech companies, probably the most futuristic stuff. It just gets me so hyped about the future, honestly.
Yep, totally. Well, we're jumping all the way ahead to the middle, but so you are here as part of our Angel Season 6, Episode 8, where we're focusing on first-time funds. How first-time is Countdown Capital?
Well, we've been around now for around 18 months. We have raised 1 fund to date, and so I guess we are very much a first time fund. Yeah. But we've made now 9 portfolio investments. So been around the block a little bit over the last year, and we've learned a lot. So it's been a fun journey so far, but we got another 10 years. So I'm buckling up.
Give us if you would, the basics of the fund. It looks like you raised $3 million with a 506C.
That's correct. Yeah. Mm-hmm. So it was a $3 million fund one. We did a 506C designation, which allows us to raise in public and to advertise about ourselves, which was unique. I think at the time when we had done it, the only other fund manager that had done it was Mac. And so Mac and I had spent a lot of time together figuring out the best ways to do this, which is fun. That's the story to date.
Mac, I think, actually was our very first guest on this season of Angel. Wow. Yeah. So, and we've sort of been, it seems to be, not only is there the theme of first-time fund managers, but this theme running through of the different ways that people are now approaching raising funds and how many options there actually are. So tell us about the process. I know Mac, I think, his deal was just calling 1,000 people a day or something along those lines. Like, how do you hustle up a fund in public?
Yeah, I mean, honestly, it was a similar process. Lots of tweeting. I think at the peak of when we were raising, I was probably tweeting every day, if not more than every day, which is a lot for me. We got flooded with both interest from founders to want us to invest in them, as well as LPs. Like, for example, I had a couple of family offices message me on Twitter, and they were all in stealth mode. I would have never known that they were following me. But it was interesting to see people come reach out to us, and then also us getting to have them sign up to a list and then set up meeting after meeting after meeting. So in total, our process took roughly 3 or 4 months. We probably did 5 or 6 meetings on average a day, which is a lot. And we try to cut to the nose as quickly as possible and focus on the yeses. So that was our process.
So you just raised $3 million on Twitter. Like, what's your background? How do you think, what was it about these tweets that were landing so well?
Yeah. So, it was definitely not just the tweets. My background is specifically having helped build a couple of startups now in the intersection of machine learning and national security. So the interest set that I have in hard tech and specifically how it relates to the strength of the United States is very tangential to my experience set, right? So that definitely helped. But I think, in general, people have been feeling a lot of energy around hard tech and wanting to build really ambitious products to help solve things for our climate, for our country, as we're now seeing, obviously, what's happening in Russia and Ukraine. And I think COVID really ignited the flame. And so we were riding a lot of that energy. And, to this day, I think we are one of the only funds that has been raising in deep tech publicly. And that energy that people had, I think, came to us as we were raising. So that was, we were lucky, definitely, to be raising the time that we did. That's definitely part of the reason why we've been able to raise this fund.
I definitely want to dig in more on the thesis, but a little bit more about you and your background in hard tech. Let's see. I think I saw that you had you said you had 2 startups in this field?
So I was the first
2 national security machine learning startups. Tell me about those. Can you tell us about those, or will you have to kill us?
No, they're totally fine.
I just wanted to make that joke one time, and I will not do that again.
So the first startup is a company called Ourcrowd, and they were essentially they're still alive today, using machine learning to essentially process unstructured data and working with different government agencies like the DoD on special projects for that, right? The second startup got acquired, a startup called Forge AI, and they were using graph machine learning similarly to analyze unstructured data, but specifically working with the intelligence community and the CIA. So we got invested from In-Q-Tel and a couple of other great Boston-based firms. So I really learned how good products are built and how bad products are built from our mistakes. And that has definitely informed the way I look at investing today in hard tech.
And so then at 26, you're like, I'm ready. But what made you decide that venture capital was the way to go? Like, it seems like you could have gone to another startup potentially or built, but were you like, I want to build a lot more things and not just one at a time?
Yeah, that's right. I think I realized early on in my career that my superpower was supporting people who were building things. So for example, as a product manager, helping the CEO work on certain projects. And that really helped me clarify that I thought that VC was the right role for me, because so much of this role is just helping founders, supporting them, and being their right-hand person for whatever they need, especially at the early stage where we are. So I think having realized that, I thought, okay, VC is a way to scalably support many people who are building the future. And I'm kind of sick and tired of putting my eggs in one basket. I want to support as many people as possible.
You're describing enthusiasm for hard tech. As a pretty new climate tech investor, but somebody who's covered this industry for quite a long time, I can say there's also a lot of fear and hesitation about hard tech. So do you think that you struck a nerve with a particularly adventurous set of LPs who said let's be risky,
Definitely. Yeah. So my LPs are very, very mission aligned. They're not your garden sort of regular family offices or even just individuals looking to park their own money. They're all a mission-driven set of people who have invested or built deep tech companies before. And that was strategic also to help us obviously grow our presence. But certainly we're very opinionated, and our LPs are also very opinionated as a result.
Is that a good thing?
I think so.
Yeah.
Because opinionated people, including myself, I think, we tend to hold strong opinions loosely. And when we do learn and when we do get ourselves burned, we're pretty flexible and understand that we did mess up and we learn from it and we try to win again. So I think it's good for us.
When you say, though, that your LPs are opinionated, do you mean that they are pretty active, maybe even in comparison to other funds?
Yes. And we try to stimulate that activity. So we have a Slack channel. We try to promote a lot of conversation about different topics and issues, not necessarily about our portfolio companies, but really more about, broader industry themes. And we learn a lot from our LPs. One of my LPs is building a company right now. Not even sure I can talk about the details, but it's definitely, it's longevity focused and it's like a 30 or 40 year timeline. And I've learned so much just from hearing about his experience building a deep tech company. So, we're constantly learning from all of our LPs.
Let's talk a little bit more about the 506C designation and what that did for you. Because again, there is a lot of, there can be reluctance around deep tech and hard tech because of those long timelines or because of the pipeline from research to commercialization. It sounds like there was something special about being able to make this pitch in public that got you over the finish line quickly. How long did it take you to raise this fund?
Yeah, so it took roughly 4 to 5 months. And
what?
I think the beauty
this
of
is bananas, by the way. People are going to be listening to this going, what am I doing?
I think the beauty of it was that we were truly one of the first ones like Mac. And so we just got a lot of eyeballs, right? Yeah. And as a result, just the pure scale of the impressions we got and what we were doing, it was natural that at least 1 or 2% of those people had the capital and were interested in what we were doing. And so, I think what's unique about the 506C is that it just shortens the timeline to getting eyeballs on what you're doing. And we were able to jumpstart the process as a result and raise quickly. So,
were you full-time during those months?
I was part-time. I was part-time raising, but also part-time finishing up my gig at a different fund that I was on the investment team of. And so I got to spend all of the time that I wanted to doing fundraising and helping, moving that through the pipeline. And at the same time, finishing up my gig where I was getting paid a little bit to help that fund. So I did manage to keep my pocketbook afloat, which was really important for me. I'm young. I don't have a lot of wealth. But I wanted to make sure that I gave this the best shot I could. So I was happy to get that balance.
And then the digital tools, it seems like, were also pretty useful for you because you're not in the Valley or in a tech hub, right? You're in Missouri.
That's right. Yeah, Twitter definitely compressed my network incredibly so. I have met so many incredible people through Twitter. My entire network is pretty much through Twitter at this point, which is incredible to say.
And you just joined, can I go back and say you just joined Twitter in 2019?
I did. Yes.
That is, you should probably take some time and write a manual about how to use Twitter unbelievably efficiently.
I wish there was some science towards it. A lot of it is just shower thoughts, to be honest.
So you join Twitter in 2019, you're raising from Missouri, you are known in a certain community, right around machine learning and national security. Raise this fund. Now, is Twitter the primary way, like you just said, that you're keeping deal flow going?
Yeah, it's definitely, I would say it's not just Twitter, it's generally using social media and spontaneity at the same time. So, for example, our investment in Hadrian came through me DMing Chris on Twitter and looking at his bio and saying, hey, that's a really cool thing that you're building, let's chat. Mm-hmm. And next thing you know, they raised a seed round from Founders Fund Lux Capital like 3 months later, right?
Wow.
So that was fun. And then I also did investment into a company that didn't even exist until I had found the guy on LinkedIn out of nowhere because he had an interesting background. So I just messaged him saying, hey, cool background. You're doing climate as well as deep tech. It's very rare to find that. let's chat. And 5 days later, we were leading the pre-seed round. So it was insane, just getting to see how social media helps our deal flow and how we use it.
Yeah. Wow. Tell us a little more about Hadrian. And I think that'll help some people who may not be familiar with what you even mean when you say you're investing in hard tech and deep tech.
Yeah. So Hadrian's basically building factories of the future. They're using software to power hardware to deliver aerospace parts to start with, other industry parts as well in the future, but aerospace parts to start with to customers as quickly as possible, beating out, legacy mom and pop shops across the country. So they're vertically integrating, they're using software, they're leveraging hardware, but they're not building any unique hardware themselves, which is super cool. And, they're working with some of the biggest space companies in the world, Astra, ABL Space, all of the ones that you're probably seeing on the news, they're working with. So it's a lot of fun. I was a very small check, and Chris is definitely a lot bigger and building something way bigger than I think even I could have imagined when I first invested. But kudos to him, and I'm just really, really grateful to be a very small part of this. So
let's use that as a jumping off point for the thesis. Your thesis, you write, is it's time to rebuild the American industrial base, one rocket ship, literally at a time. Talk to me more about the thesis and how you deploy in that direction.
Yeah, that's right. So I think there are three main components to our thesis. The first is stage, pre-seed. The second is the focus on technology, which is hard tech. And the third is our opinion, and that is founders rebuilding the industrial base of America, right? The first two, pre-seed and hard tech, really came out of my experience. I found that there was always room to be a first believer in technically difficult, capital-intensive companies. It's risky, obviously. There's a lot of capital that needs to go to work to make these companies successful. But where there's risk, there's usually high reward and low competition. And so, similar to how Peter Thiel looks at building a startup, I looked at it from building a fund's perspective. And I said, hey, this is a really interesting opportunity. I think if we focus on this, we can actually generate a lot of alpha, right? So that was really the first building block of our thesis. The second, as I touched on earlier, this opinion around founders rebuilding the industrial base. Mm-hmm. I found that, honestly, back since like 2015, 2016 with Brexit, there was going to be a backlash to globalization, and there was a lot of money that could be made by bringing manufacturing, supply chains, energy back home, but not necessarily relying on traditional frameworks of labor, but using technology to automate a lot of that, right? Mm-hmm. And so what I believe very strongly was we can remain cost competitive with countries like China and Russia if we use technology to drive our manufacturing base and other industrial base activities. And so that's how we came to that part of the thesis, really.
And like you said, doubling down on America. As you sort of implement this thesis, are you thinking about it in specific buckets? Are there directions that you want to go? Are there filters that you're applying as you sort of decide, or are you opportunistic, within the thesis?
I would say that there are definitely themes that we like, and one theme we really do like is vertical integration. So owning everything from the manufacturing point of view and supply chain point of view, all the way to selling to the end customer. That's very compelling to us, as you can drive margins, high margin activity over time. Second, I think defense tech in particular is one sector that people really didn't think was going to be impactful, but I think we're seeing will be very, very formative this decade. And so we've been focusing on it, honestly, since day one, but even now more so, we're thinking about ways we can support defense innovation as a theme. And then finally, I will say anything relating to manufacturing, let's call it components or materials that are very important for U.S. national security, like timber, for example, or semiconductor chips. We're always looking to find ways that we can invest in those sectors. So those are the themes that, generally speaking, we do like.
Talk to me about check size, because you're describing expensive operations potentially, and you're a $3 million fund. Do you have a big network of co-investors, or are you really trying to say, let's get these off the ground and then find them a landing place?
Yeah, I would say three things. One, big network of co-investors. We usually co-invest with other angels who are value add with us. or larger firms. So that's number one. Number two, being a first believer itself, again, is really important. So we find that just by saying that, hey, we will invest, that usually adds fuel to the fire for the rest of their fundraising round, and we can help them do that. So again, just having the audacity to say yes to hard things is part of what differentiates us. And then finally, honestly, with deep tech and hard tech companies, the biggest thing is finding talented people and getting them to join your team early on. Even with a small check size of like 100K, you can use that to hire people. And so honestly, the biggest reason why people take our check at the very early stage is just to have that initial form of capital to start hiring that engineer they really want to bring on board, who's from SpaceX, for example, and can add a lot to the team. So that's the reason.
And then how do you think about timescale? The other big panic point about hard tech is how long some of these projects can take. Are you concerned about that? I mean, I always feel like my counter argument to that, certainly on the climate side, is I'm pretty sure we want them to go quickly.
Yeah. I mean,
kind of an urgent situation on all these fronts.
Yeah. I mean, I would say, so a couple of things. First, obviously, we want people to move as quickly as possible, and we invest in founders who move with a sense of urgency. So that's a given. But that being said, it is a reality that a lot of these technologies are not very mature right now. And so we have actually instituted a longer fund life than the average venture capital fund today. We have a 12-year fund life with an extension period of another 2 years. So that brings up to 14, which is pretty sizable. Yeah. And we also have a slower deployment period. So I know a lot of people are thinking a lot about deploying in 6 months to a year. It's the new fashionable thing in venture capital. We are doing the opposite view. With hard tech, we want to space ourselves out. And so we're looking at deployment periods of at least 3 to 4 years. So that's how we at least mitigate some of the risk on the front end with us, because we truly believe there are only a handful of great deep tech companies a year. But at the same time, we're trying to give room for our fund to mature on the back end, and going up to 14 years, for example, will help us.
Right. That is so interesting. And I wonder how it changes your reporting relationship with your LPs. I mean, IRR as a metric is sort of fundamentally distorting, right? If you're talking about how much money you return and how quickly, I would imagine you said to your LPs up front, we're going to have a different conversation.
Yeah, I think everybody who's bought into the fund is more interested in multiples than IRR. Again, they're all deep tech tangential anyway, so they get that this is going to take a long time. That being said, there's no excuse for not having good returns, right? And we are definitely a financial driven firm. We are here to make money for our LPs. And if we have to sacrifice in the IRR by a couple of percentage points, we're going to aim to 5x the multiple. So that's the way we look at it.
Got it. One or the other, basically.
Yeah.
Or ideally both.
Yes.
This is the part where I would love for you to get us excited about the future. We were sort of chatting a little bit before we started recording about what a cool job this is and what cool things we see. But I now sort of feel like you're seeing the really cool stuff.
We see a lot of really interesting things. We see anything relating from nuclear fusion technology, obviously for climate, purposes, all the way up to like hypersonic weapons factories and hypersonic jet factories. So we're seeing things that are literally 20 years out, and it sometimes is a little overwhelming, to be sure, because so many great people have great ideas, and we want to fund all of them. We can't. We don't have all that capital. But at the same time, honestly, just having a call with somebody that's thinking on a 20-year time scale, that feels so passionately about building something that nobody else will believe in besides themselves, is so invigorating. And truly, it is more than even software companies. You really have to believe in yourself if you're building something that's that ambitious. And so,
very true.
Yeah, that itself, the confidence, the spirit of the audacity to want to do something like that is infectious. And it really helps us as a firm stay on top of what's happening and to take big bets as well.
Who is on your team to help you vet these ideas? I would imagine sometimes I've already had this experience. Sometimes things come along and you're like, if that's real, it's amazing. Who do I even ask whether it's real or not?
Yes. So I do have now, actually, for the first time since the start of this fund, I do have a chief of staff. So she's helping me a lot work through some of the opportunities. But our LP base, as I mentioned, is very, very strategic. We have PhDs in everything relating to aerospace all the way down to optics engineering. And so we rely a lot on their expertise and have one-on-one calls wherever we can with them. We also have advisors. We have a couple of advisors who are more business focused, but we have one specific advisor who is, for example, a PhD in mechanical engineering that can help us work through any diligence questions we have. That being said, I will say that the technical risk at the stage that we are operating in is very, very overstated. A lot of times for pre-seed companies in hard tech, it's a lot more important to understand that there's a market and there are customers that will pay for your ambitious technology, as opposed to just building out technology that is, questionably feasible. That's really the more important thing. Validating that people will pay for example, your hypersonic weapons factory, not just whether you can build it.
Right. Interesting. Do you also work alongside non-dilutive capital? I'm hearing a lot about companies who are raising some venture, but also doing what are some, sort of new and pretty interesting grant programs and fellowship programs in some of these areas.
Yeah, I would say not really, actually, at the early stages. Certainly as companies scale in hard tech, they will need to raise debt financing and other ways of asset acquisition that are not just venture capital equity. But at the stage that we're at, these companies are super early and they're just trying to hire people. And what we find is that non-dilutive funding has all of these milestones and things that you need to get done, especially in hard tech. Whereas venture capital, where we're investing in, we're just investing in great ideas and great people. So,
and then how do you go about sourcing those or proving out those commercial opportunities on the back end? Like, are you thinking, look, the government's a giant buyer. Let's build that funnel.
Well, yeah. So we have a lot of connections, both on the commercial and the defense side. We definitely run by the market opportunity with people in our network who are placed in those positions. The other really key tell is simply asking founders how much customer discovery they've done and to give us evidence that they've talked to 20 people, for example. And you would be surprised that most people have not done that. So that to us is a signal that they're looking at it as a science project. And we're not investing in science projects, we're investing in businesses. And if you haven't thought about the customer, you haven't thought about yourself as a business. So that's the way we look at it.
That is outstanding advice, by the way, for everyone here who is listening. And then finally, before I let you go, I want to ask you about how you're moving to Miami.
Yeah. I'm so excited.
You have this special thing being the guy in Missouri. but
I
also,
know.
Why Miami over, any other tech hub?
Yeah. So I think a couple of different things. First, it's great weather and I'm sick and tired of the Midwest. Second, yes. Second, lots of free thinkers, independent thinkers, that are out there. I like how they kind of embrace creativity and contrarian thought. And that speaks to me on a cultural level. And then finally, there's a growing number of hard tech builders in Miami. Hard Tech Miami, for example, is an organization that just got started that's working on providing some space and mentorship to people who are building companies in hard tech in Miami. And I want to be a big part of that when I move down. And so it's a combination of culture, weather, community. To me, that's a killer combination.
Not the worst when you describe it that way. Not the worst. I'm going to grab a question real quick from one of our new noties. And by the way, our producer, Rachel, would like us to know via the Slack that she loves Hard Tech Miami.
Oh, amazing.
So from Noti Bob G, what makes your fund different from competitors? You answered this a little bit because it sounds like there aren't many, but I wonder, are more coming into this space and how will you differentiate?
Yeah. So I think still, in terms of differentiation right now, it's being able to focus on pre-seed, being the first believer in a company. That's, again, really, really hard to do in deep tech where it's very capital intensive. You're relying basically just on a plan. There's literally nothing built, right? And so I think that continues to be a way we differentiate ourselves by taking risk where other people won't. The other is on probably the, let's call it helping founder side of things. So we have started to build out a hiring funnel of deep tech engineers, folks that are anywhere from aerospace and mechanical all the way down to nuclear, for example. And these are all people who have been pre-vetted or curated by us who are looking for a job at a startup. And so when we invest, we have 3 or 4 engineers right off the bat who they can talk to hire. And so that is a big part recently that's been helping us with founders who are looking for just more than just a thought partner. They want some actual help. And, we're able to provide that with the hiring side, which is really the most important thing when you're getting started in hard tech.
I mean, what it sounds like is in addition to hard tech, like you're a sector specialist.
Yes.
Yeah.
Correct.
That's right. Maybe like a spy before? No. I mean, I'm just wondering. It just feels like you know a lot of people. Like, not many 26-year-olds can come out of nowhere like that.
I guess I work very hard, and that's all. Just putting in the hours. You know how it is.
Yeah. Yep, I do. And you can tell, and you're crushing it. Jai Malik, founder and GP of Countdown Capital, which you can find on Twitter at Countdown VC. Where else can people find you? LinkedIn, email jay@countdown.capital. I'm very, very responsive. So hit me up anytime. Jay, this is fantastic. Thank you so much. I appreciate it. Thank you, Molly. Appreciate it.
It is Friday. Every Friday, we end with an amazing segment called OK Boomer. This is where Rachel Reporting meets a millennial, a Gen Z person, and she expands the consciousness of old people so we can deepen our understanding of these new generations. Rachel, who do you got for Molly and I and the audience this week?
So this week, I got to talk to Josh from Party Round. He was definitely the most entertaining person we've had, I think, on the podcast so far. So really excited for you guys to check him out. Is Party Round like it sounds, I assume, fundraising? Yeah, so Party Round is a fundraising tool. Did you kill him after you talked to him? Is he competition? No. He's cool, don't worry. So Party Round is a fundraising tool for founders, and basically they just gamified the Party Round fundraising process, hence the name. Founders can create a round, set terms, and invite investors to participate. And then Party Round handles the required documents, signatures, all the other stuff like that to make the process go smoothly.
So it's sort of like a Sure Fund Management, which we're investors in, and that powered AngelList and us. Mm-hmm. Or I guess more of a competitor to AngelList because there's no syndicate lead, there's no fund. Exactly. You go find your investors. Does it do an LLC and wrap them all into one item on the cap table, or does it just manage the process and let them be direct investors on the cap table?
I believe it just manages the process, but that is something I'd have to go look into further because I don't know too much. I know their big thing is being founder focused rather than investor focused because a lot of the platforms out there tend to be geared toward investors rather than the founders. And Josh's role there is doing things like marketing, community growth, things like that. So most of what we talked about was in that space. I think founders and anybody working in that area can take a lot from him. He's very good at what he does. He's 19, didn't go to college, went straight from high school in Canada to working at a startup in SF and is just killing it. He's 19.
19 is pretty amazing.
Yeah, he's 19.
So that makes him a Gen Z. And so, there is a handshake protocol that Y Combinator created. So you go to demo day. If somebody wants to meet you, they send this very short email. They kind of copied the format that AngelList did in the early days, which is you say you want to invest. It automatically forwards you an email from the person, the document. Oh, cool. You put in how much you want to invest, and you're making a handshake. Hey, pending diligence, I want to invest $25K. So what they're doing is like starting you, Molly, on like second base. Like, okay, you saw the presentation. You want to make a bet. What's the bet size? Go review the paperwork. We're going to, the 3 or 4 things you're going to ask for, we'll just set up right now. And so it's a little bit forward as an investor when you do it. Like I did it a couple times, but I wanted to just meet the founders. And it was like kind of assuming that either you want to invest or you don't. And there's maybe like, I want to meet you. So it kind of skips that step. It's kind of like going right to consummating the deal. I think tools like this that at least help people walk through the process, forget about gamification, and that's fun and clever, but just creating structure for the process for people who don't create their own structure. This could be done with a Google Sheet, like putting your targets in, sending specific emails, having templates, but to put it all in one place, sure, seems like a reasonable idea. Yeah. I'm hoping one of our founders uses it and gives us some feedback on it. I haven't heard of any founder using it yet, but I think it's new.
An interesting part, this isn't about Party Round, but about Josh's platform is they do a bunch of drops. Think like Mischief, things like that. So they did an NFT drop and you were a part of it. There was a Jason NFT.
Really?
Yeah, we talk about it in the podcast.
I think I told him, like, what the are you doing with my likeness, promoting yourself? Take this down.
Jason cool with that?
Yeah, you probably did.
No, I was not cool with it.
No,
I was like, hey, dude, like,
be.
you're using me to market a startup product. I get paid for that. Like, don't do that. And I think he took it down, or then they said they would use it for charity. And I was like, yeah, ixnay on that. Like, please don't do this kind of stuff. I mean, I'm flattered, but if an artist painted a picture of me and made an NFT, like, I'm not going to stop that. But if you do it to grow your business, that's using me in an advertisement. That would be like me taking, I don't know, Shark Tank, and taking the Shark Tank people and being like, join the syndicate. And they'll be like, wait a second, I'm getting paid to do that for, another syndication platform. Like, there's a concept of using celebrities' likenesses in the real world. And so I thought that was kind of lame.
That is so interesting that we have totally talked more than once about that exact generational difference. Like this question, this total concept that there just is not ownership. There is not,
the law doesn't exist.
The law doesn't exist. Right. Exactly.
Yeah, you don't have to run anything by an attorney. That.
It's super.
Yeah.
It is. I mean, it's actually kind of appropriate that we're having this okay boomer conversation, because literally boomers are like, I'm sorry, stuff can be owned. And it sort of now feels like with the youngs, it's like, no, it can't.
Yeah.
I literally had somebody use me in their marketing video on like one of these, like, there's like really cool crowdfunding platforms, Republic, Seed Invest, Ourcrowd, Masterworks. Like these are like really on the up and up, but like there's like this whole underbelly of these ones. And one of these underbelly ones, the founder put me in their marketing video because he had asked a question on Ask Jason. I won't say which company. And then they made me the focal point of the video. And then all these people invested. And then people in the threaded comments were like, oh, Jason Calacanis is investing. He's the Uber guy. And I was like, hey guys, take me out of your video. And they're like, well, we were on your show. And I'm like, the key word in that sentence is my show. Like, you were on my show, and you're using my content for the. I was like, well, you didn't get permission from us. I was like, I implicitly got permission from you when you asked me a question at a public forum. Like, you opted into that. I did not opt into this. And I had to like explain to this idiot multiple times. And then he got really offended and he was like, you are anti-startup. I'm like, okay, don't pull the anti-startup card. You're using me to market this, and you're confusing angel investors who are influenced by this. And I talked to the platform, and the platform was like, yo, we don't want to be in a battle with Jason Calacanis. Like, can we be on your show? And I was like, listen, I just don't want people to be confused. How many people have done this equity crowdfunding? Like, there's like 200 investors. So I was like, will you just make sure, because you have now misled them, that's securities fraud. You sold them a security thinking that I am the investor and that I'm the proponent of this. Because at some point I said, oh, what a great idea. And like, they're like using, oh, what a great idea in the video. Like, I'm endorsing the fundraising. Like they, did the like crazy edit. Long story short, they emailed everybody. Just to be clear, Jason isn't in it. And they finally removed me from it. And then the guy emails me a year later after I have this battle with him over it. And it's like, hey, are you sure we can't use you in our video? I'm like, yes, I'm sure. So, and some people might say, hey, what about writing a review of your book or doing that? You can review anything you want. It's when you use somebody's likeness to mislead the public that person is associated with your product and then to sell a product. So when you do commerce, which is what they were doing. So if somebody did an NFT project, my favorite entrepreneurs, and I made a painting and they're an artist, that's different. Anyway, there you have it. Well, I can't wait to listen to that section.
Anyway, R.I.P. Josh.
R.I.P. Josh. Sorry, Josh.
No.
Yeah.
Josh,
sorry, Josh.
In many other ways, but
well, I mean, he probably did that when he was 17 years old. He had no idea about using
cultural differences on display.
Yes.
Yeah. Well, this was definitely one of my favorite episodes, so I'm excited for everybody to check it out.
All right, everybody. Here we go. A little controversy. We found a fight. Yeah. Let's go. All right. Let's hear Rachel reporting. Okay, Boomer.
Okay, Boomer.
I understood the assignment.
Hello, everybody, and welcome to another segment of OK Boomer. Today, I have with me Josh from Party Round. I would say his last name. However, everybody knows him as Josh from Party Round. Josh.
I'm also Anon.
Thanks so much. And Anon, yeah. Do you want to drop your last name in here or no?
No. I'm good. I think I'll keep that one in the bag for now.
Awesome. So, Josh from Party Round, can you explain what a Party Round is and what Party Round the company is?
Yeah. So party rounds are when founders are fundraising for their startup, and they have a round with a ton of investors. And it's also, we named our company. So Party Round is a fintech startup that we started about 9 months ago, founded by Jordy and Sarah Chase Hayes, our lovely founders. And it's basically a tool for founders to fundraise on. So it takes all the pains of fundraising, like your legal docs, spreadsheets, the tracking down investors. Raising rounds as a founder is a very painful process. And so we took all that, we automated it, and we turned it into a beautiful app that feels like Cash App to raise on. It's not a crowdfunding platform. It's just a tool, but it lets you handle your fundraise effortlessly. We automate your legal docs, we track your funds, we transfer your funds, and so you just have to, start around on our app and then handle it as an OS from there. So
that's awesome. So do you have to be an accredited investor to use the app?
So accreditation is, we're not really focused on investors. It's really a founder-focused tool. We're trying to build the best experience for founders to fundraise on. And in that process, we make a really good tool for investors. But when we're talking about like using the app, you use the app if you're a founder. We're building for founders. But that being said, all that, the type of investors that a founder wants to let in is up to the founder's responsibility. So that is totally their jurisdiction. But yeah, our users are founders. But we do think it makes a great investing experience, better than I think a lot of the tools that people use nowadays to invest money in. So
I definitely agree on having it be a beautiful app. I was invited to my first party round on the app.
Oh, were you?
Yeah, I didn't end up.
You didn't end up investing. Brutal.
I did not end up investing in it. I mean, like maybe, who knows? But no, I didn't end up investing in it yet. Maybe that'll be a future Rachel thing.
To say which round it is, or do you want to keep that private?
I'll let you know off air.
Okay, gotcha.
You know the person who it is really well. The girl whose company it is. But I was invited to the app, so I got to see the app firsthand. And what made me really scared about it actually was how easy it is for your friends and family now to basically give away $1,000, because you're right, it was incredibly seamless. Like the entire app's process, which I think is really cool. A lot less steps, I'm sure, than the normal investing process.
Well, this is actually sort of what the crux of what we're trying to get at. Because nowadays, in like modern society, you can buy like stocks. Stocks have been gamified, like crypto, which is I'm pro crypto, but it's incredibly gamified. You can like blow like thousands of dollars on NFTs with the click of a button. You can do sports betting, there's like sports betting apps that I can sign up for in like 10 seconds, and I'm well underage. But you can't invest in like startups, which have been this like dominant force for good, and like one of the few ways for like people to actually gain value, and like all of that is closed off to retail investors. So like the average person has, the only options for them are basically like pseudo gambling, like trading crypto or trading stocks or trading NFTs or literally just sports betting. Like all of those things you can do with a click of a button. But investing in your friend's company, or like investing in your team, the people around you, you actually can't do. And that's the problem. So yeah, I don't think that's scary. I think that's one of the things we're trying to fix. I think people should be investing in startups. I think NFTs are super fun, but if people could invest that money into their friend's company, they would, and they should. That's better for society. That's what people should be able to do. So sorry, I was a little bit of a rant there, but
no, I think that's
this
smart.
is what we're trying to get at.
It is, and that's awesome. I also think it's scary that I can throw away $1,000 doing things like sports betting. I don't know how much of a fan I am with apps that make sports betting incredibly easy and other things like that. But I guess that's a different story. We actually talked about that as producers, how easy it is to kind of get in the cycle once you start using these tools. But honestly, like you said, investing in your friend's company, investing in especially companies that you believe in, should be an easier process because it's incredibly difficult.
I think investing is an incredibly serious decision for most people. Like I think everyone contemplates it. I don't think people take it lightly. But what is a pain is when you've gone through all the work of deciding that you're going to invest, and then actually sending money is like a huge waste of time. So like it's like really hard to keep track of. So that's what we're trying to fix. I think everyone should, invest in startups around them very with a lot of consideration. But when you're ready to invest, we want to make sure that process is accessible and quick for people. So
you guys don't do anything, right, to help with the due diligence process beforehand. It's simply just the investing portion.
We're not for investors. We are investors, but we're building for founders. So every product decision we make is like, how can we make this an incredible experience for founders to raise a round on? And in doing so, we make it really easy for investors, but it isn't it isn't really about you guys. It's just there's lots of platforms that are designed for investors, but PartyRound is built to make it easy for founders to raise their round. So
what makes it different between an app that's geared for founders versus a platform that would be geared towards investors? Like, what specific features make it a founder focused app?
Yeah, I think a lot of like the tools you'll see around like, I don't want to spend this whole time shitting on a lot of like really cool platforms out there. But they're designed with like, they're not designed with ease of use in mind for founders, in managing your round and like setting everything up. And they're also oftentimes like built for a different type of like legal structure. So right now we're building for, safes and priced rounds for founders to raise on. And I think a lot of these tools are just like, there's different types. Like there's crowdfunding tools out there, which is like, you stick a company up and anyone can put money into. And I think a lot of startups like don't really want to use that. There's things like AngelList where there's like roll-up vehicles, but a lot of, or like SPVs, but a lot of those aren't like, founders don't have a say in them. They like give away part of their company, just gets like sent out to random investors. And even just simple stuff like the UI, the like setting up the structure, managing the money as it comes in. They're not really designed with ease of use for a founder in mind. So I think it's using the app is one of those experiences that like really has blown a lot of founders' minds, because it's so many things just make a ton of sense. Like you can upload your docs and kick off a round super quickly, like just a few taps. And then you're given this screen where you can manage all your invites that you're sending to your investors and friends and community members. And then you're just chilling there watching the invites, seeing when money comes in, getting notified, and tracking everything from your phone. So yeah, I think over the last decade, we've seen a transition from like web to mobile. And I think PartyRound is built with like web tooling in mind. You can raise around on a web browser, but the future of all these things is mobile down the line, and we're really excited about that. So yeah, I think there's not really other tools that are designed for people building startups. So
I think that's awesome, and I completely agree about putting importance into UX and UI. I feel like finance and fintech in general, it's a total overlooked space, especially in design. Obviously, there are a few apps like here and there, like Robinhood, Wealthfront, that look really nice. But for example, like Fidelity, which is just something I use for like my Roth IRA, is quite literally the ugliest and hardest to use app. If anybody out there wanted to design like a new app just for funsies for their portfolio, I highly recommend like doing a project with Fidelity, because it sucks. So it's good that you guys are focusing on the ease of use, because I think like the barrier for that is becoming increasingly important. Like personally, this sounds bad, but like for a lot of apps, like if the app looks bad, the chances of me using it are very slim, even if it's like an incredibly useful app.
Totally. Yeah. I mean, it isn't, I think our amazing UI, thanks to our head of product and design, Brandon Jacoby, that's just the cherry on top of like a great experience. I think there's a lot of tools that you like can raise on, if that makes sense. Like it's possible to, but it requires a ton of work for founders. Like you got to upload all your docs, you got to talk to a lawyer, you got to get your legal docs organized. And then you like technically can track your fundraise, but you got to do all the wiring, and it's a bad experience for both founders or investors. And we compartmentalize that all on the app. So like we automate your legal docs. You literally just click start a round, and you can handle all the valuations and terms in app with just a few clicks. And we like all the flow of funds, all the transfers are done super easily on the app, and you don't have to do extra work. So yeah, I think it all comes together. It's like it's building a great experience across the board. So anyway, sorry, I'm sounding like I'm shilling our startup, but it's an amazing startup.
No, the podcast is called This Week in Startups. So I mean, like you're at the right place to be doing that.
We're out here. I can talk for years about how awesome PartyRound is. So.
Yeah. Well,
anyway.
Yeah, we can keep going. No, we can keep going and talking about how awesome PartyRound is. And like you said, there's just like so many portions of PartyRound that make it awesome. One of which is its marketing strategy, which I know you do a lot with. Can you talk to me about your role at PartyRound, the marketing strategy behind it? Yeah,
I think a lot of people sort of treat us like this startup that's like, oh, they have like a hypey Twitter about them. We're a really product-focused startup. We just are also good at marketing. I think people are seeing that now. Like when they use the app, they're like, oh, holy shit, this is an entirely engineering and product-focused startup. But yeah, we're good at marketing on the side too. And I think it's not because we're good marketers. We just like making cool shit, making stuff that can I swear on this podcast? Or?
Yep.
Okay, cool. fun. No, I'm just kidding. Yeah, we just like making like our strategy for marketing is pretty simple. It's like we want to make stuff that's funny, and we want to make stuff that's cool, and we want to make stuff that's useful for founders. And if we like it, I think other people will like it, and we've proven that. So we were just like, we're going to go out there and we're going to have fun. I think a lot of startups underestimate like that building a brand is really important. There's like a trend in the last, I think 5 years, Silicon Valley, that's like, you shouldn't worry at all about marketing. You should just like ship and do engineering and like build out a really functional product. And that's actually true. It is totally true. And we do that. It's just like, I'm not an engineer. I can't sit there and like code. We have a fantastic engineering team led by our dear Brian Armstrong. He's an amazing, not the Coinbase one, the better one, head of engineering at Party Round. We have an amazing engineering team, and they're fantastic. And we have an amazing product team. But me and my boss, Dylan Abrascato, on the side, we're having fun. We're just like showcasing our love for, founders and the startup world and like building awesome things. So yeah, we have a couple strategies. We have a very pop-in Twitter, I'd say. A lot of founders use Twitter, and we were like, hey, okay, at the start of this all, we were like, we want to reach founders. We are our founders. And I think like tech Twitter and crypto Twitter are like this really rare high density conglomeration of people building stuff. So we immediately like, let's just channel all our energy into it. And Twitter is great. It's amazing. It's a really meritocratic platform in the sense of like good stuff comes to the top. So we just make good stuff. We make stuff we find funny, and we interact with our followers heavily. And it's been great. We've had endless amounts of founders come through our Twitter. We have a wait list. It's like 40,000 strong right now, and we are onboarding founders as fast as we can. But Twitter was incredible for us. And then we also do drops, which are just like launches of like little mini products that are kind of unrelated. Sometimes they're fun, sometimes they're useful, sometimes they're like just fucking insane. And those have done really well and gone viral and brought more founders on board. So I can dive into that's sort of what I do at Party Round. I'm like a growth hacker, so I do a lot of our Twitter and community, and I also build these products on the side to go viral. But yeah, can I jump into some of the drops?
I think you should jump into some of the drops, and I also think you should like rebrand yourself as like a professional shit poster.
I actually like don't. I mean, I think I'm funny on Twitter, but it's not really what I want to be. Eventually, I'm more excited about like building great tools, and I have fun posting. But like one of the things we're talking about right now is like Party Round is this super functional product. And we want to make sure we don't get carried away with that. There's like, I think it's like a skill. You can be funny on Twitter. It doesn't mean to be your whole lifestyle
identity. So there's stuff for you down the line outside of marketing.
I mean, there's stuff. Yeah, I think even our drops and our Twitter in the last have been really, really functional. Like we have had some pretty cool tools. Like Big Tech Fellowship was this drop that we made that we paid someone $50,000 to quit their big tech job and go make a startup. And I mean, it's totally fun and like mischief-esque and very exciting. And it got a ton of viral hype around it, but that's like a really cool thing. Like we totally transformed someone's life, and they're building an awesome startup right now. But yeah, I mean, I think I want to make stuff that helps I just want to make cool stuff. And I think some of those drops already have been highly functional. So yeah, we have fun on Twitter, but I think it comes from a place of like, what do we find funny? What do we find cool? And what do we find useful? And we hope that founders agree. So
do you have like any advice on Twitter and on branding in general that you think could be used by a multitude of startups? Like, is there any one point in people's, by founders, do you see any branding that you're just like, this sucks so hard that people can change?
I'm going to like roast Twitter brands. I'm not going to do that.
Yeah, literally. No, go for it. Because I feel like there's some stuff that's being reused on Twitter over and over and again.
Twitter's a really hard platform, and I think people don't get used to that. So like Instagram and stuff, they're very like repetitive, like platforms. So like you win by posting a ton, basically, like just getting very consistent with posts. And Twitter is not like that at all. It's highly exponential. So like a viral tweet will get exponentially more than like 100 normal tweets. So you should really just focus on like hitting home runs, if that makes sense. Like I can do 100 tweets a day, and they'll get like I don't know, like 1,000 views each. But if I do one viral tweet in that same time frame, it will get millions of impressions. So I think the problem is people take that strategy. A lot of brands are constantly trying to retweet and post stuff and constantly like have a really good calendar schedule for like content. And that's bad, actually. Like face it, you're a brand. Like we're highly cognizant of the fact we're a brand. Our followers don't want their timeline crowded up with fucking brand stuff. Like they don't want the founders are busy people, and Twitter's a really useful tool, man. They got to be like checking out hiring. They got to be checking out other stuff. So the only time we're on a founder's timeline is like if we have something that we find really funny or really cool, and that's the only time that we're interrupting you. So yeah, I think that's probably the main problem with brands. It's like stop posting so much. You're a brand. So that's what I'd say. But I think it's a great platform once you get the hang of it as a company. I would say this though, like Twitter's really useful, but it's only useful for certain types of things. So it's like I don't think every brand should go on Twitter. Like I think some should. And if you have the assets to, like, do it. Like we have a lot of flexibility because we have 2 really fantastic marketers on the team, and we can go wherever we want. But like you need to, as a founder, invest in specific avenues. So Twitter was our first one because it was like, this is where 90% of our customer base is always on. And now we're sort of reaching out to other sectors and sections. But yeah, just make a strategic decision. Like our drops and our Twitter strategy and everything was a highly strategic decision that we made that was like, here's where founders are the densest. So you need to look at that yourself. Like, I don't think that people should just do drops as a strategy. Like, we love Mischief and we had a really good game plan around how we did our drops. But the truth is, marketing is like, it's about making something fresh. And if everyone's making drops, which they are now, it's like it loses the excitement. So like people who copy our strategy, it's like trying to copy like a high frequency hedge fund trader a week after they've made their trades. Like, it just doesn't make sense. Like, we're still doing drops, of course, but we're already working on other things. Like, we're really excited about, dinners for founders and just like creating like new types of really interesting content for people in the tech world. And we're excited by like longer term structures. Like I think we want to productize things like the Big Tech Fellowship or like founder houses, or just there's a ton of other things. Like you got to find what's next, and you got to find what fits for your brand. Like we were in a situation where we didn't want to talk about our product publicly for 7 months. And I think a lot of startups will just like not market at all, but we were like, we're going to still have fun. So we were the class clowns of the tech world. We were interacting with founders. We built this like founder brand, and then we launched our product. And we told everyone what we were, but you got to strategize for yourself. So I think it's fine to not do marketing if you don't have the resources for it. It's not always the best investment. We could, and we did it really well. And so it was an amazing investment. It got us a lot of hires. It got us connected with, amazing investors. And it put us in touch most importantly, with like a bunch of founders. But yeah, I think it comes from a strategic place. Figure out who you're trying to reach, and then figure out a fresh and exciting way to reach them. And don't just copy what people tell you to do on marketing. So
yeah, it super frustrates me whenever I see, and most of the time I see these on TikToks, but people that do like social media marketing managers or whoever they are, and they just like tell you trends. They're like, this sound is trending right now. And I'm like, oh my God, that's going to create like such bad content if you just regurgitate what's trending right now rather than putting like a critical thought or try to incorporate like your brand's voice rather than just speaking out and copying what everybody else is doing.
Marketing is kind of like, it's like Buddhist in a way where it's like, you have to give up the pursuit of what you're trying to do to reach it. So if I go into marketing and I'm like, oh, I need like 1 million impressions this week, I'm not going to hit that. But if I go in from a perspective of like, I'm going to make something really beautiful and share with the world, I'm going to make something that is good and is helpful, that is like something that's a value out of the world. And I think a lot of marketers approach it from like I need to rip up my, I need to get more reach. I gotta get these numbers up,
We were just talking about this.
It's like a value extraction way of looking at marketing, and marketing is really just like make beautiful things. So
yeah, well, you and I were just talking about this yesterday, how I was like, I just want to create really good content. And I think that it's so easy to stray away from that though. And like, I'm definitely at fault of that. Like, what can I post right now that I know will get like the most hype, even on like my own personal accounts? Like trying to think of everything strategically rather than just trying to create content, because I like creating content. At the end of the day, that's who I think people and brands should want their marketing professionals to be.
We have a drop coming in the next like couple days that is like so super useful for founders. It's I can't really talk about it because it's gonna be out in like a week. By the time people hear it, will probably be out, but it is like such a highly functional tool for founders. I'm really excited. So we try and mix it up. We've done like collabs. We've done like mischief style drops that make you like scratch, that makes you like crack up. And we've done like just funny stuff. And we've done like things that are like actually change the world. And now we're like, let's just make a really useful tool for founders and drop that. So I'm excited. But yeah, it's a great team, and we're having a ton of fun on the marketing. And we're also, we're also having fun building a great product. So
I just want to talk about how you got this job, because I know you're 19 years old. I know that you also hate that I mentioned that you're 19 years old, but I think it's absolutely freaking incredible because you're obviously very well versed and very good at your job. I'm not though. I'm 5 years older than you.
Are you 5 years older?
Yeah,
you're
I'm 5.
Old. No,
I'm 5 years old. I'm barely a Gen. No, just kidding. You're like full Gen Z. But how did you get this job? Were you in high school or were you like directly out of high school? First off.
Yeah. Let's jump real quick to party on stuff, and then I can talk some more about my life path. So, I was pretty much like messing around a little bit online, and I was just making kind of like fun little products that went viral, and Jordy just picked me up off Twitter and DM'd me and was like, I want you to join my new startup. This was
what
right
do you
after,
mean like little products that went viral?
Maybe we should just actually start from like, so I guess we should bring it back because it makes sense in the picture. I'm sorry, I'm fucking up your podcast, but
no, you're not at all. Don't worry about it.
Yes, I was in high school. I wanted to get into the tech world, and I'd like fall in love with startups like HQ, Trivia, and like Citizen from a young age. And when you're in high school, there's like 4 jobs you know about. It's like investment banker, doctor, or lawyer. So I was like, okay, before I make a startup, I got to go like work at Bain for like 4 years. So I went to a good college for finance. And I was like, I'm going to go my classic gunner route and like go work at like Deloitte or something. Anyway, super lame stuff. This is just like, you just don't know this stuff when you're young. I'm 19, so my first year of high school, my senior year of high school, like COVID was already starting then. So my first year of college, like I couldn't be on campus or anything. So I ended up just like dropping out. I started messing around a little bit in like the venture world, and I quickly realized that like the parts I like about finance were venture capital, and the parts that I like about venture capital were startups. And so pretty quickly I was like, okay, I want to go make a leap into a good startup as fast as I can. It took me a long time to find a really great startup. I worked for Justin Kahn for a little bit I basically helped run his fund, Goat Capital, for a while. And then at the same time, I was just getting into like, I was just like sort of playing around on the internet. So I would like skip my finals, my midterms and stuff, and skip my classes. And I would just like, for the 2 months I was in college, I would just like spend it all on Clubhouse, and I would just talk to people. But yeah, I spent a lot of time in venture, and then I was like, okay, this sucks. Venture as a student, as a young person, is a total scam. I don't have any decision making here. I want to go build something that I can like take ownership of. So I pretty quickly was like, I want to go join a startup. Jordy just picked me up. He messaged me off Twitter because he saw some of the stuff I was doing and was like, I want to talk to you about my new startup. And we got on a call, and pretty quickly we were like, it was electric. Like we were both like, oh, I'm really inspired by Mischief. I just want to make really cool stuff. And I pitched him this thesis actually that I was working on for marketing. I got another job offer. I got a job offer to do product at Do Not Pay. And so I called up my mentors and I was like, here's the situation. There's this company that I like, that's, giving me a good stable role, and they're a big company, not big, but like they're an established company at the time. They were like worth $80 million. And there's other like new startup that literally is like, it was Jordy and Sarah, the founders. They're married. It was their company. They just started it. They were in the process of hiring Brandon at the time. And it was like so new. And I was like, but I'm really excited about what they're doing. Like, I think it's world changing. And my mentors are fantastic. I owe a lot of people, like my parents and JD Moresco, David Zhao. These are like these people that have just taught me a ton. They were all like, that's great, but you should take the like stable, get your foot in the door career thing. So I ended up picking Do Not Pay. But then I got like a bad reference check or something. It was like an awkward process. The founder of it told me I was interviewing for marketing, and then he put me on a call with like the head of product, who I only found out like 45 minutes into the interview was actually interviewing me for a product role. So the whole time I was pitching him marketing stuff, I'm like, we can change marketing forever. And he was like, so do you want to do product here? And I was like, oh, wrong thing. Anyway, it fell through. So I was like stuck. I just got in a place in SF so I could work down there for them. And I was like, oh my God, I don't have a job. I just dropped out of college for this. I have like no credentials. I had like 1,000 Twitter followers at the time. So I called up Jordy and I'm like, I'm sorry. Like I was like, I basically was just like, I was pissed off at the time too. I was like super spiteful. I was like, I will f up. Put me in, coach. So Jordy was like, this is awesome. I joined Party around May 10th. It was like 9 or 10 months ago.
Dang, so you sound like the most ideal candidate, by the way. Let me just say this now. You sound like the most ideal candidate for a startup, because I think if you find somebody that is like young, super passionate, and ready just to I think you might have tweeted something similar to this, how I don't even know how to put it, but you tweeted something.
My own tweets.
Yeah, what was it about? Like, I don't think it's bad to like be spiteful. You know what I'm talking about?
Oh, I was arguing with some guy. Yeah, I mean, I think that's like one of the purposes of life is like getting back and like showing. Maybe I'm just a spiteful motherfucker, so that could be it. But like, I think it's a beautiful process. Like, I think people are really scared of being like petty and revengeful, but these are like the stories and legends that make like life worth living. Like victory, achieving victory, proving yourself, proving your worth. So I have no hard feelings against nothing
is more motivating than hearing somebody else say no. Nothing is more motivating than being told no. I feel
I took all that strategy I wrote for them, and then I immediately put it to work for Party Round, and I was like, I'm going to build this. I had like no idea what the fuck I was doing, because I was just out of high school. So I'm like sitting there, and Jordy's like, yo, like let's do marketing. I was like Googling like how to market a startup. Anyway, we just quickly got a baseline strategy, which is like, literally. It was like, I remember making the Party Round marketing Notion. I was just sitting there staring at this new tab called marketing in our Notion. I'm like, I'm way over in my head right now. But yeah, it was strategies pretty quickly. We were like, all right, founders are on Twitter. We want to reach founders, and we want to make cool stuff and cool content and have a ton of fun. And I would say we've crushed that over the past month. I don't know if people like know us. I don't want to be arrogant if like people on this podcast don't know Party Round, but check us out. We have a really sick product, and we also have a ton of fun online. So we have done quite well for the few of our drops in terms of marketing. One of the ones we made was this NFT drop back when NFTs were cool. It was called Helpful VCs.
Oh, it's dang. So wait, Jason I think was one of them, right?
And he was also like, Jason got all whiny because we used his face. He was like, oh, sorry. Am I not I guess I can't talk Jason on this podcast.
No, you gotta
Jason
do it.
Literally
you gotta do it.
Was like, wait, are you allowed to, like, you're using my face out of line? And we're like, dude, it's all good. We're like, we're having fun. We're like, we donated all the proceeds from that to we gave it out in grants to founders. But yeah, we made NFTs of VCs and their likeness in CryptoPunk style. And we were like, if you want these, you have to retweet to claim. And just like everyone went, they just like lost it. It was like all these.
Did anybody get Jason? Did anyone get Jason?
Oh, I think Jason retweeted it to get his own. Jason got his. So every VC on the block was like, I need this. And it was amazing. We had a ton of reach. And then we took all the money we made from it and we gave it out to founders. But yeah, it was really fun. It was a really fun drop. Anytime you can sort of play around with VCs' egos, we have a lot of fun with that.
Yeah, Mischief is one. So for those of you who don't know, because we've been mentioning Mischief a lot, Mischief is an art collective. I believe they're actually based in Brooklyn. Gabe, I believe, is like the founder.
They're trying to be an art collective. They're a product studio.
They do audacious stuff. They made Grimes had a sword on a red carpet event, and the sword was made by Mischief, and it was like a repurposed gun, which is kind of cool. They do a bunch of stuff.
I'm gonna hot take this because I want to preface this by saying I'm a spiteful, like, sad, bitter person.
Oh my god!
I've always been slightly offended that Mischief has never tried to hire me, because when you're like a growth hacker, Mischief is like the Harvard of the growth hacking world. I think it's like they had set an amazing standard, and they totally changed the way people look at like products and marketing. But I think they've fallen off a tiny bit, in part because a lot of the really talented people there have like gone on to go work and lead other startups. Yeah, it's like Andrew Watts, head of marketing at Simulate, is like an amazing example. He's like one of the most talented, funny people I know. I barely even know him, but he's close friends with my boss, Dylan Eberscotto. But yeah, I think Mischief is they're struggling with like repetition and keeping it fresh. It's really hard to to productize that things. Like there's a lot of pressure on them every week. You have to have something cool. They had an SAT drop that was pretty neat, but I think it's a little like I
like their dead startup toys where they had like the actual desk toys, but for like it was like Elizabeth Holmes, Theranos lab, like desk toy, like how investment bankers have toys that sit on their desk, but these were like toys that were just of dead startups. I like that drop. I thought that drop was cool. Did you get any of the toy? I feel like I'm shit talking. I don't want the Elizabeth Holmes one. If anybody has one, I want one, please. Please.
It was they were like really cheap plastic toys. But anyway, Mischief changed my life in terms of inspiration. But yeah, no, we bought a bunch of those toys. We did. We have a bunch of our office. You can have one.
Oh my gosh! Look out! I'm about to rob you guys. You're on my rob list.
Okay. Yeah. We'll give them to you for free.
They don't work.
They don't work. That's what I'm saying. They're just the Theranos one, dude, is literally just a chunk of plastic with a sticker on it.
Yeah. I thought, isn't that what like investment banking toys are though? Like literally like the deal. It's not called deal toys, right? And they just like
Deal
sit on your
toys.
desk.
Yeah.
Isn't that like what they are?
Speaking of deal toys, we have NFT deal toys when you close a round at Party Ground.
Wow. So is it like a deal? Wait, do you get a physical toy that looks like a Bored Ape? Or do you get like
this is actually
NFT?
Inspired by Jason. Jason, has always been like, I was one of the early checks in Uber, which he probably
he said
was.
that once or twice.
We don't want to leave that up to like, we think the blockchain is a great, like, a great use case. So for like commemorating these things and tracking them and putting them on record. So when you invest in a company, it's on the blockchain, and you get this is mostly just for a fun thing. We're not an NFT startup, but this is exactly how we approach products, where it's like we want to build useful stuff for founders, and we also just want to have fun. So yeah, when you raise a round as a founder, your investors get NFTs to commemorate their investments. They can flex and show off, and they're really pretty. So
do you think it's more important to do things like these drops and to have really thoughtful outside the box marketing, or do you think it's important for a brand to absolutely just double down on Twitter, like on one platform? Like, which one do you think?
I mean, I think it's like a strategy thing. I would say we're doubling down on Twitter. Our drops are good on Twitter. We're only now getting into things like Instagram and other form content, but it's really just a strategy thing. Figure out where the people you're trying to talk to are, go to them. So, I mean, if we were a CPG brand, I'd be on Instagram. So,
yeah, that's something that really frustrates me sometimes when I see brands that are CPG. A lot of brands I've noticed that are more geared towards fun food, I've noticed a lot lately, are on Twitter. Go over to Instagram and blow up Instagram. I think fun food on Instagram, my mother will spend endless amounts of money if you have a link to a fun food product. That woman is, and that woman is not on Twitter. Like, I can tell you that. And nobody around her age is on Twitter.
Really cool. It's all about like finding value in marketing. It's very similar to like, I just like, if everyone is on Instagram for something, it's actually not, there's some really cool CPG things that have popped up on Twitter. So it's really just about strategy, but it's like everyone's on CPG Instagram. Sometimes you can actually get really good alpha on other platforms. So, but yeah, no, I agree with you. But I think it's always about like, coming up with creative stuff. There's a few CPG brands I like on Twitter. But anyway, we aren't a CPG company, unfortunately. We did do a CPG drop once, but
really?
It was Cometeer Coffee. It was Party Grounds.
Wait. Party Grounds. I just talked to somebody that worked there. So Cometeer Coffee, they're like these little pods, but they're not K-cups, but it's basically just condensed coffee. So,
totally.
The shipping and supply chain is a lot better. So we actually just had on the Canna founder, which also has like a similar ideology where it just costs so much money to freaking ship. Like the supply chain of beverages is like psycho, and Cometeer Coffee is similarly in that realm of like, it's really expensive to ship liquids. Cometeer Coffee has like condensed coffee, I believe, in like little pods. And you guys did Party Ground, like you just said, and the packaging looked really sick.
Brandon, follow at Brandon Jacoby on Twitter. He's amazing.
Was it Brandon Jacoby that did it?
Brandon Jacoby. Well, it's like, I mean, all these things are a team effort. Like when we talk about product and marketing, it's the whole team getting involved, but he's an incredible designer. So
head of marketing
and PM. Oh, sorry, it's at Jacoby Brandon. I'm fucking with it up. Sorry, Brandon.
Dang.
It's at Jacoby Brandon. We have a challenge right now. First of us to 10K followers gets to make the other person get a tattoo. So I really shouldn't be shouting him out, but I'm pretty confident I'm going to beat him to 10K. So
what are you going to get a tattoo? Or anyway. Do you want to get a tattoo of like the Party Round circles, like your guys' logo?
Yeah, I think I will get a tattoo. I'm waiting till I get my equity, just because, like, I feel like that's just like a more once I vest, I'm getting that tattoo.
So you also have a tattoo of something else that has to do with NFTs, right, on your arm?
Oh God, don't expose me like this. Yeah, I have a ERC 721 tattoo. It's
and what does that mean? What is what is that?
I'm a loser. My thesis on tattoos is like,
you gotta explain what that is. You gotta explain what that is, because people listening.
It's a DAO. I got a tattoo to join a DAO. You got me. I'm an idiot.
But isn't that like the legal document, right? Like the actual tattoo you have is the name of the legal document for NFTs or something like that. Yeah.
So ERC 721 is a type of token, Ethereum token that lets NFTs, work. But I just got a tattoo to join a little group chat. It's really fun. So you'll like meet other tech people around the world, and they'll have the same tattoo, and then we like tap each other up.
That's pretty good for community building.
It is really fun. 60 seconds left, Rachel. What are the final questions here? We can go over.
Oh man, we're gonna have to go over because we haven't even talked about.
That's good.
I do want to pivot our conversation a little bit more to just young people living in New York City, especially young people living in cities that work in tech.
Yep.
Tell me your thoughts.
Yeah, in general, I think like a good place. I think you should just get to a city if you're young and you're a technologist or you're building cool things. I think the first decision is like where you want to go. SF, Miami, New York. I'm very biased. I lived in SF for about 8 months. It was great, but actually, I don't really have any hate to SF. I think SF is really cool when you're young. I know there's a lot of like people hyping up the crime in SF right now, but it's like if you're young, like just carry some pepper spray, hang out with a bunch of like find friends that can fight. No, I'm kidding. It's really not that bad. But New York was my first love, so I love New York. I think a lot of people should come here. I think Miami's cool. No one gets work done in Miami. I also like every time I go to Miami, there's like a ton of drama and shit that goes down. So I just like don't want to work in Miami. I don't know. New York's great. You guys should come to New York. But yeah, dropping out is a little bit of a unique situation because you do trade off a lot of like, I would say like social life, and anytime you have to make a decision around college, it's like okay, credentialing, credentials, connections for business, connections for like friends, like your relationships, and then like how does this actually help you in your career? I think credentialing in general in college is stupid because college is like a fallback plan. It's like basically like, if I don't have a job, I need a college degree to like get a job. But like that's a fallback plan. You're planning for like the worst case scenario where you can't get hired. And I just don't think many people, especially in tech, like a lot of people in tech are trying to do insane things with their life. Like I'm risking my entire life on like the 1 in a zillion chance that I can be someone who makes something absolutely great, which is, I'd say that chance is higher now that I work at Party Round. No, I'm kidding. But don't live your life for fallback plans. That being said, it's great to like not have responsibility. Like I'm 19 and I live like I'm just in my mid 20s. And that's some of the things I didn't really have an option because I wasn't going to have any community at college anyway, because it was in COVID. But I think people nowadays, it's like, do really consider the situation deeply. It's nice to not have a ton of responsibility. It's nice to have a period in your life where you don't have to like just be an adult, and college is great for that. I personally hated college because I didn't like being just like a normal person. Like I was just a guy there, like I think it's partly because I'm very like, dude, maybe I'm just like a narcissist. No, I'm just like, I believe in myself a lot to a fault. And it was like having this sort of dissonance when you get to college and just being like another guy there was like, I was like, this sucks. I do not want to I don't want to be normal. So I was like, I'm going to go and gamble with my life and try and do something great. But yeah, I think it's
find community. How do you find community without? So like, if you're like blatantly honest, like if you're over 21, I guess like we met in a WeWork. So WeWorks and co-working spots are like very cool places. We also met. We met in an airport.
Get a fake ID. I'd say the first thing you need if you're a college dropout. Get a fake ID. Yeah, I mean, New York is unique. Like even if you go to college in New York, it's not like you're going to college. It's more like you're just like going to NYU is the closest thing to dropping out you can do without dropping out. So.
Explain your thoughts on there.
It's like a commuter college.
You literally have so much NYU hate in you. It is
I don't have NYU hate. I have a lot of friends at NYU. I think NYU is a great school. I would have loved to go to NYU. I couldn't have gotten in, so I'll say that.
I'm just saying, commuter school.
New York specifically is a unique scenario, but I think there's lots of ways. Like tech is one of the most welcoming, opening places for connections.
I agree.
Even last week I tweeted out like, how do I meet people to go party with that aren't in tech? And like 1 billion really cool tech people replied. And so I'm spending the next like 4 weeks just hanging out with more awesome tech people. I think it's important to be like, it's my tribe. Like I love people that are trying to do great things with their life. And I think I've made a ton of lifelong friends doing hacker houses and stuff. I would strategize like, if you're a young person, you want to drop out, consider that deeply. And then if you're ready to like basically sacrifice your life to do something amazing or try and take that risk, drop out, figure out a hacker house in a city somewhere. If you're young, go live there and meet a lot of really cool people in the city.
Did you do a hacker house in SF?
Yeah. So me and I did Edify. Edify unfortunately just got, I don't actually know a lot of what I want to say. Edify no longer exists. It was an amazing 9-month project though. It was a bunch of houses around the world in SF. They had houses in Seattle and in New York. And it was amazing. I think I'm sad Edify doesn't exist anymore, but the founders are my roommates and they're doing something really awesome. So
that's very
I think hacker houses are fantastic. But yeah, I would say go down there, meet a bunch of people like you. It was really great. It was like we had a house in SF that was like 10 of us in this like mansion that we all were like, I was like sharing a room with some guy, and you just meet a lot of like fantastic people. Like the difference from college was immediately apparent. These are people that were like doing absolutely insane stuff in their lives. But yeah, it's like tech versions of college. So I always think we should keep that open. I know Edify doesn't exist anymore, but there's new stuff already popping out in cities around the world.
Yeah, I saw our mutual friend Ami, I believe, is in one.
Yes.
Yeah.
Ami's great. Ami's letting tech people ball out.
He's a 19-year-old
messing up the balling economics.
He literally is. So we have a friend that is also, I believe, 19, and he has a DAO called Dropout DAO, and is currently living, I believe, in a hack house or something equivalent to a hacker house. And he seems like he's absolutely killing it in SF. I agree. I think that it's very difficult, though, for people outside of the tech community to understand how welcoming the tech community is, because when I tell my friends, we met on Twitter, that doesn't necessarily like go over the conversations on different when you're talking to a non-tech person.
I'm speaking to the choir here because I think this podcast will mostly be shared on Twitter, but like getting on Twitter is so important. It's an incredible platform. It's like a life-changing platform. I've done like almost all the good things in my life have come from Twitter, to a point where like I'm pretty sure I'll probably like get married to someone off Twitter. I'm kidding, but I hope that doesn't happen. But like that's just such a huge portion of the things in my life that have been good have come out of Twitter. Like I got hired off Twitter. I found that I met my roommates off Twitter.
Yeah, I got hired off Twitter.
Ben hit me up and was like, "I'm making this house in SF called Edify. Do you want to join?" And I was like, "Yes." That let me functionally drop out of school. So I think we should always keep that route open for technologists.
I agree, and I think that it's Twitter's one of those platforms too where the chances of you sliding into someone's DMs that's doing something like you think is absolutely amazing and them responding are incredibly high. There's literally no other platform. When we're doing Outbound and I have to get like a really cool founder on the show, my first place I go is Twitter because always. Like it's just amazing.
Yeah, you can just like tweet at people too. I forget what I just did, but I wanted to meet Jackson Dahl, who's the guy who is a co-founder at 100 Thieves. He's like a huge idol to me. And I was at ETH Denver, and I was like, I just tweeted out like, "Yo, I want to meet Jackson Dahl." And turns out a few of my friends, Michael Dempsey.
You're talking about 100 Thieves, like League of Legends?
Oh yeah, I'm a huge League nerd on the side. So I have an Anon account where I actually just like write like 538 style sports analytic blogs, but for esports.
That's awesome.
So anyway, huge. Yeah. But I actually was talking to him about founder stuff, and like his career and his visions and like how he makes decisions. So he's awesome. But anyway, Michael Dempsey is this amazing investor at Compound and a really good basketball player too. And he's just like, "Oh yeah, I'm good friends with Jackson." So he just connected me and it was awesome. So yeah, Twitter's life changing. You do need to build it's definitely getting more like powerful for me right now because I have like, I'm about to hit, it sounds like, I actually don't have that many followers, but as soon as you get like a good critical mass of followers, it becomes this incredible tool. So I wonder where like Mark Andreessen has thought of my tweets, because like statistically has he seen them? Yeah, I mean, he retweeted one of my tweets once, but like I don't think it didn't come from me, it was like retweeting something that Turner Novak retweeted. That was from us, but sometimes I just wonder like when Paul Graham is scrolling Twitter and he sees like a party round like meme tweet, like I wonder what he thinks. So
yeah, well, I saw like Alexis Oharian respond. He's probably like an investor of your guys's, but like does he follow you? Like I feel like that's like kind of cool.
776 is an investor in party rounds.
Very awesome.
I think one of the good strategies founders can do to like boost their like stuff on Twitter is like just go get your investors to like and comment. They're amazing. Packy, Austin, Nick Sharma, Nick Milanovic.
Nick Sharma, another good person in the marketing world.
Pretty much all those guys, like they are, and I'm sure I'm missing a ton. We have a ton of people that help us. Alexis too. They just like, they interact with our tweets. They're like really, it's like a low lift for them, but it's still a really valuable value add. So
do you have any like recommendations though on like building your personal brand as a founder, as like an individual, not a brand on Twitter?
Yeah. Honestly, no. I don't know. Yeah. I haven't really thought about that.
I see a lot of people tweet. Is it again though like quality over quantity? Because I see a lot of people that just spit out so much content.
I think if you're like trying to, I think like obviously it's good to think about a personal brand, but like my Twitter is very personal. I'm not trying to like make it go big. So I actually am going to I'm a little sad if it gets any bigger, but yeah, I don't know. I think your personal brand is like obviously the basics, like tell good stories, but otherwise I'd just be like, stop caring so much. Just be yourself.
Yep. I was just about to say, I actually hate the term personal brand because it makes me feel like a commodity. Like somebody today texted me that
commodified.
Yeah, she was like, "Can I help you with your personal brand?" I was like, I don't know because like I don't want to.
I don't think you need help with your personal brand. I feel like you have a pretty good one.
Thank you. I don't know.
Yeah.
Yours, I'm not out here almost at 5,000 followers, I have to say.
5,000 people
so small. Don't want to listen to what I have to say.
Twitter's the only platform where you can have like 5K followers and consistently reach like millions of people. Like
That's
I think probably like 3 million
TikTok.
people.
I think TikTok you could do that. I definitely think with TikTok.
Not with like 5K followers.
I think so. I think you could have like, I've seen literally accounts with like 500 followers hit like 1 million views.
I've seen, you can also like go viral with like nothing on TikTok, but it's very random where I can consistently with 5K followers, like get an insane amount of impressions. But yeah, I think the value of like a Twitter impression is so much more valuable than like a TikTok impression.
Than a TikTok view. I agree.
I also think TikTok's heavily restrictive in like what type of content can do well there. So yeah,
what do you mean?
I'm like very anti TikTok in terms of like using it as your main marketing channel. Unless you're like a brand that's like just like selling to like kids, just because it's like stuff won't go viral unless it's like funny. While I can like make a product announcement and get like a zillion impressions. So I think it's not great for building a personal brand because you have to like bow to the algorithm. Twitter has no real algorithm. It's really mathematical. It's just like if people like and comment on stuff, it's like allows it to get more views. So it's very much like a mathematical function versus like this constantly changing tracking algorithm. So. Yeah, I think Twitter's more meritocratic in terms of content. I think you can do better things. I think one of these days, just to like prove myself, like if I am really as good of a growth hacker and like viral, like mimetic person as I think I am, then I should go and prove that by making myself an influencer. So I might start that in like a month or two, like spend 6 months
become an influencer, but like as a joke.
Not really as a joke, just for like to prove it. I mean, it's like if I am really as good at this stuff as I could, I should do that. Right now I'm working on writing a lot. I think that's probably gonna be my next thing. I want to like. Party Ground's where I'm going to be for the next like X amount of years. I love the team. I love working for Jordy. I'm learning a ton there, but I also like I probably want to start building like little mini side projects on the side, especially in crypto or in like viral like mimetic stuff. And then I want to write more. So I'm starting a blog.
Have you read Wanting?
Section.
You keep saying mimetic. Have you read the book Wanting yet?
No, I haven't. What is that?
Good one. It's all about mimetics.
Are you saying wanting as in like? That's so that's actually mimetic. You're saying M-I-M-E-T-I-C.
Yeah. What are you saying?
I'm saying M-E-M-E-T-I-C. So mimetics with an I is sort of the theory of how things that are alike, like very similar, naturally come into conflict. And mimetics, which I'm talking about, is basically mimetics are like the traits that enable ideas to survive and spread.
Gotcha.
Mimetics actually is this cultural it was like this term created and then immediately like killed by its creators. Like it's not even considered true in like cultural idea theory. It's like this term that was immediately left for dead and like thrown to the corners of the internet, but it survived. And so I find it incredibly fascinating. It's basically how like animals have like speed or like strength or intelligence, and that helps them evolve and stay alive. But like being fast isn't the point of being an animal. Just like staying around kind of is the point of evolution. And so mimetics are the traits that make ideas good at sticking around. So like truth or like not true or like virality. Those are all traits that ideas use to stick around. So yeah, I think it's a relatively new idea. People talk a lot about memes, which are like, I think they're like less important actually on the grand scheme of things than like understanding mimetics. But yeah, I think we're seeing a lot of like, that's going to be one of the trends that's probably going to come to like dominate society. Like right now with this Ukraine, Russia stuff, like you're seeing a lot of like highly mimetic, like MEMETIC, like war going on. People are like making sure their takes spread. They're like trying to dominate news feeds on either side. So yeah, I think just something people need to be cognizant of. Like we've reached this point in society, I think, where virality is like almost too strong in the meta game. Like it's too strong.
What do you mean?
And so like a lot of times there's meta games are like the natural state of things. And like if like you play like tic-tac-toe, there's like a meta game, there's like an optimal strategy. And optimal strategies aren't always balanced. They're often like deeply unbalanced. And I think in the spread of ideas and in sociology, virality has come to like dominate society. So like the internet is like most of the content you see is highly viral. Truth gets destroyed by like false truths, just because false truths can be more viral.
Yeah.
Just like basically virality is almost too strong. So there's a lot of implications that has for society. That's some of the stuff I like to write about, but I think it's like a relatively new thing. It's like no one really is talking about. I mean, there's like a lot of like stupid like tech bros that are like, oh, memetics and like how you can use it to like get like 5% more growth metrics. But this is like really like society defining stuff, like how we transfer ideas and what ideas we prioritize. So anyway.
And when will we be seeing some of your blog posts come out, or is this like a in the works process?
In a week, I'm working on a piece called Anti-Memetics. Cool. And I'm not going to talk about it because I think it's probably the most important idea I'll ever have in my life. So do check that out when it's out. Sorry, I'm shilling my blog now, a non-existent blog.
No, we're excited. And by the time this comes out, I actually think the blog will be out.
Oh, well, I'm terrible at writing, so we'll see.
I'm sure it's phenomenal. I'm sure it's great. Do you have any advice? I'll let you pick between people that are young and want to work at a startup or growth hackers. For either of those
advice
groups.
For either of them? Mm-hmm. Oh, I mean, I think people with growth hacking abilities know they're growth hackers, so I don't need to give them too much advice because I'm competing versus them. So in general, I think to kids, like advice is just people trying to build great things with their life. I'd say the metagame for what startups are optimal to join risk reward has changed. So find something with like 20 employees that's like raised a round or something and join that. So like before, people told you to like join breakout list startups that were like join a startup with product market fit with like 100 something employees, like Airtable. Sorry, nothing wrong with Airtable, but like don't join that now if you're a young person. Like go and take a bet. There's a lot more upside on a smaller startup. And if you are a talented engineer or designer or growth hacker or God knows what, talk to me. We are constantly hiring amazing people Party Round. So
awesome.
Yeah, my advice is join Party Round, guys.
Awesome. Well, thank you so much for being on the show. I'm really excited to hear what Jason has to say.
No problem. I hope Jason doesn't, I
hope Jason tweets at you.
Yeah. I think I might be below his line. But one of these days I'll get above it. So
yeah, let's hope.
Yeah.
Well, thank you for being on, Josh.
Thank you so much.
Hey everyone, producer Nick here. I want to tell you about the SaaS Syndicate. If you're a founder of a SaaS company with a product in market, our investment team wants to talk to you. Head over to thesyndicate.com/SaaS, SaaS, to apply to raise from the SaaS Syndicate. And you can join Jason's syndicate of over 9,000 accredited investors at thesyndicate.com.
Producer Justin here. Know a cool startup? Check out openscouting.com, where anyone can refer a startup to our investment team here at launch, even if you don't know the founder. If you're the first to flag a company for us and we decide to invest, you'll get $5,000 in cash or 10% of our carry.
Hey everybody, producer Rachel here. Are you an early stage startup that has product in market, some traction, and are looking to raise at least $500,000? Apply today to Remote Demo Day for your chance to pitch to over 9,000 investors in Jason's syndicate. Submit your application at remotedemoday.com. Our next event is on April 27th.
And if you want to learn how to invest in startups from the world's greatest angel investor, and no, we're not talking about Chris Sacca, then head to angel.university to apply. The 4-hour workshop costs $300 and all proceeds are donated to charity. To date, we've donated over $175,000 to various charities, and you can see the full list at angel.university/charity.